This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, tandem rested, is in the studio.
Of course,
and this morning as well. Hope you stay cool today. We don't have the heat yet. I mean, a lot of sympathy
today.
around the country. Yep. We're not there yet. Be careful out there. That's all I can say. Everybody making a big deal about it, but it's early June. I do take the point. We're talking July and August here, and the fact is it's June.
Yeah, exactly. So it kind of snuck up on a lot of folks here. So we'll see. We'll deal with it.
Just did the math on the bull market. Great bull market. We're going to be really focusing the next couple of days on this. Eric's out talking to every equity strategist on the planet. Paul, early 2020, the world's going to end. Pandemic, serious stuff. People we know dying. Not funny at all. Stimulus. I mean, let's be honest. There are 1, 2, 3 stimuli. We're up 124% on SPX, 21% per year.
I know.
Off of the pandemic low.
Yep. Exactly. I mean, we're up 15% year to date so far. A lot of that was in the first quarter. But again, what you have here for these equity markets, Tom, is the expectation that the Fed will at some point cut, maybe not as much as we initially thought coming into the year, but they will be cutting rates. And earnings have been pretty solid there. If you put those two together, that's a constructive market.
Coming up on June 30, maybe some window dressing going on as well.
Yep.
Bloomberg Surveillance this morning brought to you by Resnick Advisory Assurance Tax. See how business strategies from the world of golf can help your company build competitive advantage. Watch the Business of Golf series at CohnReznick.com/golf. Let me give you that again. Cohnreznick, CohnReznick, CohnReznick.com/golf. Paul, I got a 40-year bond for sale.
Oh, boy.
And we're thinking you're going to pay 1.375, 1 3/8 percentage points, move the decimal over, 137 beeps, over the Treasury. No, there's such a demand, it got cut in 27 beeps to 110 basis points.
Amazing, yep.
I mean, they made like 4 phone calls.
Home Depot. I mean, they sold $10 billion worth of bonds, Tom, in the U.S. investment grade market to help finance its acquisition of building products distributor, SRS Distribution, but they had $47 billion in orders for this deal. So they're able to, as you mentioned, Tom, cut that pricing. And our good friends at Bank of America, Goldman Sachs, JP Morgan, and Morgan Stanley managed that deal.
We'll have to see it. Futures flat here. NASDAQ, what a shock, green. With our Bloomberg Business Flash, Lisa Mateo.
You got it. Yeah, futures taking a little bit of a breather. This is after the S&P 500, NASDAQ Composite both closed at records. Information technology, that was the S&P 500's best performing sector. Chip makers having a particularly good day. You look at Broadcom right now, that led the way. Shares are up about 2% right now. Super microcomputer, Micron Technology also outperformed. So we look at S&P futures right now, we're flat. Dow futures flat. NASDAQ futures up about 0.1%. To the bond market, we have the 2-year yield 4.77%. That's little change. The yield on the 10-year 4.29%, and that is little change. To earnings we go. We have shares of home builder Lennar. They're lower, down more than 3%. Here's the thing. The company posted profit. It was bigger than expected, but the orders forecast for the current quarter fell short of estimates. We have a few companies making news, starting with EV startup Fisker. Filed for bankruptcy, discussions with a major automaker about investment that ended without a deal. And then shares of Boeing down nearly 1%. Its CEO Dave Calhoun heads to Capitol Hill today. And this is sources say Boeing's search for a new CEO is gaining some momentum. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. On the equity markets and the linkage into the economy, is just really where we're focused right now. Anika Gupta joins us now, Director Macroeconomic Research, Wisdom Tree, with all the efforts that they do. Anika, is the economy moving the stock market, or is the stock market anticipating an okay or better economy?
I think it's the stock market, Tom, that's anticipating a better economy. Clearly, most of the economic data that we've received in Q1 has been a lot stronger than expected in the U.S.
So Anika, as we step back here and we think about kind of where we go from here, the S&P 500 is up almost 15% year to date. It's up, 30 odd percent from the October period. Do we have any valuation concerns in this market here? I'm not sure while the earnings have been good, I'm not sure they've been that good. How do you think about valuation?
Yeah, valuations are extremely high. We do believe that the U.S. is is trading at quite a strong premium versus the rest of the world, which is why we're often telling investors there are many markets out there. You've got China trading at a deep discount, but obviously that is for reasons. We have seen a bit of a rise from those extremely low levels, but then markets have stabilized around this point. We also see Japan as offering quite a strong opportunity. Again, trading at quite a discount versus the U.S. equity market, and emerging markets as well has come about. The price to earnings valuation gap of emerging markets versus the U.S. is at a 20-year high.
So as we think about Japan, Anika, Tom and I have been talking about this for a while. We've gone 20 to 25 years without even mentioning Japan. And now in the last year and a half, we've got Warren Buffett and others telling us to take a look at Japan. What's changed about Japan?
Well, there's been a plethora of reasons that have changed in Japan following Warren Buffett stepping into the market. I think first and foremost, we've seen a strong rebound in earnings, and earnings remain the key driver for equities. We've seen a strong rebound in earnings revision estimates for Japanese equity markets. We've also seen a strong wave of corporate governance reforms. We had the Tokyo Stock Exchange announce to more than 3,000 companies listed on the exchange that if they do not raise their price to book ratio above 1, they actually risk being, losing their status on the exchange. And since then, we've seen strong dividend payments by Japanese corporates. We've also seen buybacks rise to a record level for the financial year that's ended March 2024. So it's been quite interesting from that point of view. We've also seen a very strong initiative by Prime Minister Kishida, where he wants to convert Japan into an asset management nation. So they've revised the NISA account, similar to what we saw in the US with the 401ks. And I think that's also leading to a strong, rebound in sentiment towards Japanese equities. And I think last but not the least, we're looking at Japan coming out of more than a decade of deflation, now, viewing a new wave of cost push inflation. And that is, led to increase in interest rates. We've seen the first rate rise in 2024. And I think that's also another reflection of the fact that Japanese investors in the retail market can no longer just park their money in safe deposits, but they need to be looking for higher yield. And I think they're gonna move towards the equity market to get that extra yield.
Anika, thank you so much. Anika Gupta with us with Wisdom Tree this morning. I have something on the screen right now, folks. I really want to emphasize this. We make jokes about the Dow Jones Industrial Average, which is what everyone's hardwired to. Michael Barr and I remember when the Dow Jones Industrial Average was 600. Anaconda Con for, AMC. That's when you had a Pinto.
Yes.
Yeah, that's when you had a Pinto. But the answer is, Paul, I'm looking at futures at NASDAQ 100, 20,226.
Yep.
Nobody's making a big deal about NASDAQ 20,000. I'm sorry, it's a huge deal.
It's a huge deal. I mean, tech's kind of been moving the needle here. I mean, it kind of goes to the issue of for the market overall. Is tech still what's going to lead this market forward? It's been that way for, I'm going to say, 15 years plus. Tech has been the leader of this market, and I can't think of a scenario where it's not going to be, because now you've got AI and all of that hype.
Yeah.
So tech has to be there, it seems like.
Red and green on the screen again into the end of the quarter and earnings season coming third weekish of July. With our news in New York City, here's Michael Barr.
Thank you very much, Tom. Paul, Lisa, President Biden is about to take sweeping action to protect undocumented migrants while trying to soften criticism about his actions at the border. We get the story from Bloomberg's Steve Potusk in Washington.
The president will announce a streamlined path to legal status for more than 500,000 immigrants. Under the new policy, spouses and children of U.S. citizens who've been in the country at least a decade will be able to apply for permanent residency without having to leave the country first. The move could be a counterweight to an order the president signed earlier this month aimed at curbing asylum claims. The president plans to roll out the policy today at an anniversary event for Deferred Action for Childhood Arrivals, the Obama-era program that protects undocumented migrants who came to the U.S. as children. In Washington, Steve Potusk, Bloomberg Radio.
South Korean soldiers fired warning shots after North Korean soldiers crossed briefly over the land border again this morning. All of this happening while Russian leader Vladimir Putin visits North Korea on a 2-day trip starting today. Thailand's Senate has voted overwhelmingly to approve a bill that would legalize same-sex marriage. It cleared the last legislative hurdle for the country to become the first in Southeast Asia to enact such a law. The Boston Celtics now have more NBA titles than any other team. They won their 18th championship last night at home after beating the Dallas Mavericks 106-88. Celtics forward Jason Tatum.
Banner number 18 has been hanging over our head for so many years. To know that we're going to be engraved in history. And it still hasn't, registered. I'm just still trying to process it all.
Great Auerbach is looking above. Oh, yeah. Tatum helped his team to victory. 31 points, 11 assists, and 8 rebounds. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Paul, in the retail, somebody who really combines it all, Drew Mattis over at MetLife, publishing a note moments ago. We expect the Fed to cut 3 times, 75 beeps. By year end, he's looking for a sharp drop in consumer sentiment, but he leads by saying consumers like Michael Barr have not run out of runway. The runway's still there. Yeah. Are your kids have some runway?
I think they are. They're all employed, and hopefully they're, and our thing about the credit cards is you pay it full every single month. Do not even think about letting $1 of that stuff run. Those are the 2 things. Get a job and don't run out.
Did you hear the echo last night? It filtered across New Jersey, across over far into Ohio. Me screaming, look, Mr. Sweeney took Seamless away from his kids. Is this going to happen at this house too?
Yeah, and the whole...
Speaking of retail sales.
Cutting some of those streaming services. They creep up on you in your credit cards.
You just did one here. We won't say which one.
I just did it this morning. Yeah,
you're brutal.
Just cut one off. Yeah, so no more streaming service for
he
one of
cut
those.
one off standing here. Lisa's signing up for Max right now.
Yes.
I'm a sucker.
It's that churn. For these streaming services, the churn is incredible.
Now,
remember how hard it is to cut a cable service or a phone service? It takes like a 3-hour phone call. Yeah. These streaming services, it's literally the click of a button.
And review that. Netflix is half the churn of the others as a general rule.
The Netflix churn is low relative to everybody else simply because I think they just invest so much in programming. You can't afford not to have it because they're always coming out with something good. Yeah. So anyway, we'll see.
Okay, well, we'll see. Retail sales coming out here. And again, Mr. Mattis over at MetLife, despite having burned through their famous Sweeney excess savings from pandemic-era stimulus, we continue to see consumers as able to spend.
Yeah, absolutely. I mean, I don't know. I was out at a restaurant last night in Jersey. Packed. Yeah. Monday night. Packed.
Can't get in.
It's just, so people are out and about. They're having a good time.
I'm going to give you a lot of bull market perspective here. A lot's coming up. I think more into July as well. I'm in the camp where you're seeing massive window dressing right now. People catching up on tech. They're behind and they need to own it. From New York City, stay cool. Bloomberg surveillance.
24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen, and this is ahead of more economic data out today. Bloomberg Economics, it says U.S. retail sales may show a slight rebound in May, climbing about 0.3% from the prior month on price cuts. Now, gains in industrial production, well, that may only be modest, with manufacturers expecting demands to cool. So right now we have NASDAQ futures up about 0.1%, 28 points at 20,221. We have Dow futures, little change, down 30 points at 39,202. S&P futures, little changed, down about half a point at 5,545. Over to the bond market, we have the 2-year yield at 4.77%. That's little change. The yield on the 10-year, 4.29%. And that is little change. We'll check in with commodities. We have spot gold lower, $2,309 an ounce. Brent crude, $84 a barrel. WTI crude, $80 a barrel. Bitcoin touched a 1-month low as most crypto stocks starting to decline. We have Bitcoin right now at 65,000 around. And Coinbase Marathon Digital Holdings checking with those crypto stocks down more than 1.5%. All right, let's get to the companies making news. Tesla shares down about 0.1%. Reuters reporting Elon Musk telling his staff the company is working on offering stock-based compensation for those top-performing employees. And also, Musk is also working on planning a Venmo-like payments feature for X nationwide. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. And Mark Gurman had a note out, Paul, last night, Apple Pay Later, which I didn't even know about. It's going after a firm in those.
Okay.
And they're getting rid of it because they're doing something else. And I just don't understand why they don't buy the market leaders in that. You know, just acquire the name.
Well, I don't think, a lot of folks say Apple can't buy anything. The Justice Department is so far into them, looking at them, the federal trade. I don't know. So, I mean, it just, a lot of those big tech companies just can't buy anything these days.
The charge card business is struggling. I mean, it's booming, but at the same time, people are like miserable. But I got red and green on the screen. Greg Valliere out with a smart note today on some of the wild cards of our political economics. And his last paragraph is on commercial real estate.
Yeah.
Where we need to gauge it right now, folks, for you. Is it like, okay, or is it when you read the Twitter of somebody selling something, giving it away for 60, 70% discount? How critical is this? Sweeney probably was a huge success last time he was in with Angel Oak Capital. Where are you, Atlanta?
Yes, Atlanta.
Did you see Lisa down there?
I did not.
Did you two get together? She had the pimento omelet. It was very big. I priced pimento, the Kraft cheese spread.
Yes,
it's expensive.
It's expensive.
It's very
I was
expensive.
shocked. Sweeney's with us on commercial real estate. Thank you so much for joining us. What's the level of crisis or panic in commercial real estate?
Yeah, I think there's different levels of risk in commercial real estate, in all things not being equal. But I can start with 3 levels of it. One is the credit side of it, which we see in office space across the board, and I think you see it in secondary office space for sure. And that's where you see more of distress levels. Class A office buildings seem to be doing better. And then you got multifamily on the other side, which supposedly was a good space to be in. And what we're seeing is a pure differentiation of cap rates. So you can have a multifamily 90% occupied, moving into a different entity, and now you have losses at the equity level. So we're seeing that pain across the street, across the board. More importantly, we also invest in sub-debt of community and regional banks, and that's what we do as investments. And we're seeing that the banks, it's not painful, but it's steady weakness. So you're kicking the can down the road, and hopefully you can adjust the values over time.
But, all right, so office real estate obviously has its challenges across the country, but everything else is fine, isn't it? Generally speaking, in real estate, I mean, I know the interest rates are higher, so that makes it tough to refinance, but, I mean, we have a shortage of housing units in this country. We have retail that's doing pretty well. It's just, other than office, commercial real estate is kind of okay, isn't it?
Absolutely. I mean, so I said credit aside, it's become a cap rate issue. Now, but for example, if you look at multifamily, especially in Atlanta, but in different parts of the U.S., you kept raising rents as you keep developing new properties. So now you have a twofold problem. Your rents are stabilizing, in some areas coming down, but your cap rates have gone up significantly. So when you go refi that property, or you try to move it from a development to a insurance company who's about to buy, that's where the problem comes in.
Can I ask a dumb question?
Yeah.
If I'm in a multifamily in Nashville or Austin, and it goes belly up, is my lease affected? Is my ability to stay in that apartment affected?
I don't believe so. I think it gives you more negotiation power across the board, because you just need one of those apartments to reduce rents, and then that creates across the board rent reduction through the entire city.
So are you predicting that multifamily is going to flatten out or even decline in unit growth per year?
I think we're seeing that. I know this is a question we have from the economist perspective, why are we not seeing that in the rents? But we're seeing that in the investments that we made, that the underlying properties, the rents are coming down for sure.
So talk to us about, I'm fascinated by Florida. I mean, I love Florida, great state. Where are they putting all these people? I mean, are they just building new units down there? Like, because everybody I talk to is moving to Florida.
So I go down to Palm Beach from time to time.
Sure.
And I can tell you that Palm Beach has now become Palm City. Palm City has become, so Palm Beach has extended all the way through. So there's tremendous development in parts of Florida. Palm City, which used to be a small neighborhood, is just growing. So there's a lot more that's being developed out there.
How bad is the traffic in Atlanta?
Atlanta traffic is one of the worst. COVID was helpful. You know, COVID was bad in some ways, but very helpful in some ways, but it's bad.
All right, so what are we doing in terms of, is institutional investor money coming into, I don't know, residential real estate, commercial real estate? Is it the capital? I mean, we have higher interest rates here. Presumably the returns are going to be lower. What is institutional investor money doing?
Yeah, I think the institutional investor money is patient right now. And so there's no reason, there's no call to action. But what we tell our institutional investors, if you look at absolute yield levels in fixed income, in residential space, in commercial space, but more importantly in residential space, you know, you're getting north of 7+% yields on senior secured assets. And you're not seeing that probably since 99, 2000, 2001. And so people are starting to invest in that space. If you look at the credit curve, the equity side of residential real estate in terms of investing is in low teens, but the senior assets are 6 to 7%. So the credit curve has flattened in a certain environment. So going up in quality is what we tell our investors. We just don't know whether we are a soft landing or a hard landing. We can debate that endlessly, but the credit curve seems to position in the front part.
I got 6 beds and 7 baths on Ocean Boulevard in Palm Beach.
Nice.
We're giving it away for $73 million.
Whoa.
Is the Sweeney Prabhu method to go long $73 million in an office outside Atlanta and short the $73 million Georgian bungalow in Palm Beach? Is that where we're heading 5 years from now?
I think it'll get there. I think that, you know, to answer your question, from a distress, if you want above average returns, you have to look at commercial real estate. That's where they are. Are those opportunities today? I think they're developing as we speak. But residential has just been a strong part of it. Now, the 73 million is a different number, but baseline residential real estate is in a much better place. I mean, the last numbers I saw, there's 30+ trillion of home equity in housing. So we're in a complete opposite paradigm as 2008, where the mortgage consumer or the U.S. consumer delevered their mortgage credit, which was exact opposite of what we saw in 2008. So with that much equity in housing, that can also play into soft landing that people are talking about.
We got to run here, but so the beach house that Lisa looked at this weekend on the New Jersey shore, that's going to be an all-cash deal. I mean, that's the demand.
Yeah, that's what we're seeing more and more.
Are you selling Nvidia or Broadcom?
Can't go Nvidia now.
Or crypto.
Crypto. This has been great. Don't be a stranger. Sweeney Prabhu with us from Atlanta. You got an Atlanta question, Lisa? I mean, you know.
I went because when I was in Buckhead, and that's like shopping central.
Yeah.
Yep.
But it was busy.
Yeah.
So is that also? Do you see that? So a lot of the stores too.
You guys have moved down there.
I know.
BlackRock has moved down there. So you get 200 people from New York, and they go look at a house in Atlanta. They buy cash. Yep. The amount of equity that people got. So the neighborhood that I live in, if you had a $1 to $1.5 million house, that was a big deal.
We got to go. We're going to move there. I'm not rooting for the Braves. Srini, thank you so much. Red and green on the screen. Stay with us. Stay cool. Bloomberg surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are mixed, and this is after another solid day for the S&P 500 and ahead of more economic data out today. Interest rates still in focus to economists at Goldman Sachs. They see U.S. jobs at an inflection point as the economic activity starts to slow. It's sticking with its call for 2 rate cuts, with the first taken off in September. All right, so we have NASDAQ futures up 0.1% or 29 points, 20,222. Dow futures little change, down 33 points at 39,199. S&P futures little changed at 5,545. We have the 2-year yield 4.77%. That's little change. The yield on the 10-year 4.29%, and that is little change. Companies making news, that's Amazon right now. Union members there voted in favor of linking with the International Brotherhood of Teamsters. Amazon now down about 0.2%. Shares of Adobe down more than 1%. The company facing a lawsuit from the FTC, and the agency accusing Adobe of making it too tough for consumers to cancel their subscriptions. And Apple, Tom mentioned it, shutting down its Pay Later program. Instead, it's offering third-party services that would be integrated into the upcoming iOS 18 software. Their shares up nearly 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. And now from London, we should have music behind this. Like yep. Surveillance Royal Ascot reporter Kriti Gupta joined us today. How about it? Kriti, I see Saturday and Friday are sold out. Are you going to be out at Royal Ascot this weekend?
Oh my gosh, they couldn't even get me into Foxfield in Charlottesville. Horse races are not my thing.
They're a big thing there. I looked at the dress code. Serious, like no jeans.
Really? Okay.
You have to wear a proper hat.
Okay.
Pharaoh would call it a proper hat.
Yep.
There's all sorts of rules, and I don't know what a Bardot neckline is.
I don't have a top
go
hat.
There. Kriti Gupta here on the equity markets, and she's been doing a bang-up job trying to keep track of it. Kriti, what is the distinctive feature of big tech right now?
It is a liquidity story, 100%. And it went from a momentum squeeze where everyone was saying, look, we got to get our head around AI. We can't miss out on it. And you heard that from clients. You heard that from investors. You even heard that from traders, to the point that options to the downside are still, to this day, so cheap, but no one's willing to bet against it. I think in the context of the global markets, and this is me sitting here in London trying to talk about it, you're starting to see it turn into kind of a FOMO 2.0 on AI to really a defensive move. And I think a lot of that's because you have these big tech companies sitting on trillions in cash, and that's a good thing for a lot of investors who want that defensive tilt.
So, Kriti, on your show, you anchor markets today, 7 a.m. to 9 a.m. UK time.
Nice plug.
When you get guests, real people who do this stuff for a living, are they buying the stock market today?
They are not buying it today, but they are positioning for later. And I think right now the big conversation in London especially is, when do you hop back into the European market? And I think that's a really big question, because there have been so much of the politics, but people aren't really talking about the fact that so much has been going against the French market to begin with. So the conversation around the geopolitics when it comes to the European market and the European equity market in particular is that there was a little bit of steam kind of taken out of the European market, and now looking to buy back in, specifically when it comes to French banks and specifically when it comes to further weakness in the euro, because at the end of the day, you need the euro. Things like your Nova Nordisk or your ASML.
I looked at BNP Paribas this morning. Help me here, Kriti. With the news flow going to the French election, is there finally a bid on French equities? Is there a sigh of relief over the last 24 hours?
I wouldn't call it a sigh of relief, but there's definitely a bid into French equities. And a lot of people are saying, you can't. Here's a fun fact about Europe. You can't see technicals in Europe without someone rolling their eyes, which I find as a New Yorker shocking and tragic, frankly. But it's important because this is what there's a lot going on with technicals, but it is something that people and Europeans are actually talking about, that you had a 5% mini correction and people are buying back in.
Is there a bull market effervescence? I don't mean just at the, I think she's at the bar when you go in the main door at the right.
Exactly.
Forget about the Ned, Kriti, but in general in London, if you go over to where you hang out in Mayfair, it's like $40 martinis.
I know, but
excuse me, 40-pound martinis.
Yes, exactly.
But Critty, is there a bull market effervescence? Because NASDAQ off pandemic low is 21% per year. FTSE 100 off pandemic low is half that, 11% per year. Is there a bull market effervescence in the city?
There is a little bit, but it's really a function of what's happening in the States. If you look at what the makeup of the FTSE is, or even your best performers in the Stock 600, they're primarily dollar earners. At the end of the day, if you are investing into the European market, you're really keeping an eye on how much of that revenue is coming out of the States. And for a lot of these companies, it's like 50 to 60%. So really a play on European equities is, at the end of the day, for at least for some of the large caps, a play on the American consumer.
Which research are you looking at? What I noticed, they had Kolvanovic, the bear over at JP Morgan, out rebearing in the last 24 hours. Other people are creeping up as well. Give us one vignette into a sell-side equity strategist that you've read about.
Oh, an equity strategist. All right. Citigroup's Beata Manthi has recently downgraded Europe. Even though she upgraded its price target. It's a really interesting take that she had, simply saying that you are seeing weakness in Europe, and some of it's simply just paring back all of the growth. At the end of the day, if you're worried about the American consumer, you're worried about this catch-up trade that's been pushing Europe higher for so long relative to the States, she says some of the steam might be getting let out.
Kriti Gupta, thanks so much. Greatly appreciated this morning in London. Extra duty for us. She had to come on lunch for that.
I know, exactly.
She has a catered thing going on with that little club.
I like the Bolter Pub. It's right around the corner from the Bloomberg headquarters. Yeah. Nice little pub, little quiet street. That's where I would kind of hang out. I mean, then you go to the Ned later, of course, but the Bolter Pub is my
tourist tip. If you ever have the chance and you are in London, go to the Bloomberg headquarters. It's right by Mansion House. It's right by the Royal Exchange and the Bank of England and all that. It's a beautiful building, but that's not the story, besides Kriti Gupta being there.
Right.
The story is beneath. While they were digging it up, and I give Michael Bloomberg and Peter Grauer immense credit, we said stop.
Yep.
Because we found an original, way back Roman ruin. And it is really haunting. And the best part about it, Paul, you go down the stairs and you see the buildup of soil and urban growth over hundreds and hundreds of years.
Yeah.
And you go down the stairs, and we have on the side of the stairs, this is where the soil was in 1800. This in time of Dickens.
Right.
This is where the soil was in the American Revolution. This is where the soil was for Henry VIII. It's shocking.
Yeah.
The single reason to go is just to go down the stairs.
Yeah, exactly.
And then bonus round, you get there. It's spectacular.
And an extraordinary museum there. So
Mithraeum.
Mithraeum. Exactly. That's a better pronunciation. Extraordinary museum going back to Roman times, and so it's central and integrated into the Bloomberg building. Very cool.
The equity market, and I guess we're all scarred by what we've lived for, and I vaguely remember Nifty 50 and all that.
Yep.
But I must admit, it's not addictive or a drug, but every afternoon at 2 p.m. you look and go, it's still happening.
Yeah, exactly.
For whatever reason.
Yeah. Yeah, so I mean, we've got the Dow Jones Industrials. We did touch 40,000, several weeks ago. We're at 39,000, about 200 right here on the Dow. The SPX, 55, 45, hitting new highs seemingly every day, 30 times so far in calendar year 2024 here. So again, you kind of put it all together. You've got a Fed that presumably is going to be cutting rates at some point, maybe later rather than sooner, maybe not as many times as we initially thought, but still in a rate cutting mode. Plus, you've got a decent earnings backdrop. We had
that's what I would go
earnings.
to.
Yeah,
I would Gina Martin Adams sitting in here 6-8 months ago, saying, "I'm sorry, we're doing the math, and earnings aren't that gloomy."
Yeah.
Now I bring that over, folks, away from earnings, which I really don't. Full disclosure, I don't pay attention to, over to free cash flow, or on the Bloomberg. There's a phenomenal screen called the WACC screen, the weighted average cost of capital screen. It's there's some math going on there and some terminology, but the answer is you're seeing companies that are profitable.
Yeah.
And what they're doing.
And that's the difference, Tom, between now and maybe 1999 and 2000, where the profits just weren't there. Here we have healthy profits, and as you like to call out, Tom, healthy free cash flow that services equity holders, debt holders, and that's the difference.
Exactly like yesterday. I got fractional weakness in the Standard & Poor's 500, the NASDAQ up just 0.1%. The VIX in a bull market 12.71. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Senior Biden administration officials say President Biden will be announcing 2 new actions that will provide immigration relief to certain undocumented immigrants and DACA recipients who have been in the country for years. A new program will allow some undocumented spouses and children of U.S. citizens to apply for lawful permanent resident status. The president also is expected to announce a new action that will help facilitate the process of obtaining work visas for DACA recipients and other dreamers. A new analysis of the Trump tip tax exemption proposal shows how much it would add to the deficit. Bloomberg's Ed Baxter has the story.
Donald Trump's latest effort to court young voters would have tips be exempt from taxes. And the nonpartisan Committee for a Responsible Federal Budget suggests the plan would be comparable and potentially much larger than the $172 billion projected revenue loss from extending the 2017 tax cuts for small businesses and other so-called pass-through companies due to expire next year. The CRFB warned the cost would be much higher if employers and employees responded to the tax exemption by shifting more overall compensation from wages to tips. Ed Baxter, Bloomberg Radio.
Firefighters in the mountains north of Los Angeles are battling a 16,000-acre wildfire that has caused evacuations. In Gorman, California, firefighters have made some progress on Saturday and Sunday flames that were raging in the strong winds. However, people with respiratory problems have been warned to limit time outside. James Gore, Sonoma County Supervisor, remembers back to the 2017 brush fires that caused very dangerous conditions.
Tubbs fire, the Sonoma Complex fires, everybody got caught on their heels. We got smoked. There was this mantra here that was never again, not never a fire again, but never get caught on your heels again.
So far, the point fire is about 20% contained. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
A little politics in soccer. The French team is really actively involved in the French election.
Why? I saw the headlines. I didn't really get into it.
I'm going to be direct. It is a part of France we don't see. I'm as guilty of this as anyone. I say I go to China. I go to the Mandarin Hotel.
Right.
I go 3 blocks away, including HSBC and Steve Major. I go back to the Mandarin Hotel. Then I go back to the airport and I go, I went to China.
Right.
So when we say we went to France, I'm in 3 arrondissements, surrounded by Dior, Hermes, and something else.
Yep.
That's not going to France.
No.
And there's a whole other French out there, and the various stars of the French soccer team are involved in selection. Like, there's no equivalent in America.
No, and it's I was kind of surprised when I saw that, to see them kind of step out here and
Les Bleus.
Yeah, obviously there's a lot going on with the European Union and the French with these snap elections coming up. So it is front and center here.
We're going to get Leon Laurent at some point, aren't we?
Yeah, we can do that.
He's our great voice in Paris. He's tough to get. I love the French are called Les Bleus. We're thinking of calling the Detroit Lions Les Bleus.
Yeah, exactly.
Les
Trois.
Les Bleus. How do the Lions look? I mean, first of all, do you do spring training in football in 90-degree heat wave heat? Come on.
Well, you're going to be indoors.
They're going to be indoors.
Yeah, they're going to be indoors.
They're going to bring it into their stadium in Detroit.
Yeah. Well, I mean, there's the facility that's not far from, Ford Field, but it's indoors. So, it's nice air conditioning.
Seriously, what about high school teams? What's a high school team do in St. Louis?
Well, that's something totally different.
First week of August.
Yeah, that's tough.
Yeah. It's brutal. I mean, I did a little bit, and it was nothing like now. There's a heat wave out there. Be careful. Folks, NASDAQ, green on the screen from New York City. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen. NASDAQ futures up 0.1%, 24 points at 20,217. We have Dow futures, little change, down 28 points at 39,204. S&P futures, little change at 5,545. The 2-year yield, 4.77%. That's little change. The yield on the 10-year, 4.29%, and that is little change. Companies making news. I want to point out Best Buy. They're getting ready for that big AI surge. The company says it's trained more than 30,000 employees so far to sell and repair Microsoft's new AI Windows laptops. They go on sale today.
How many
Best
people?
Buy, 30,000 just for the train them on this one laptop. It's coming out today. Best Buy up more than 1%.
Are they going to sell 30,000 laptops?
They got to know how to fix them and repair them. They got to know the whole shebang, okay? Guacamole could be taking a hit. The U.S. suspended new avocado shipments from Mexico after an incident that reportedly threatened the safety of American agricultural inspectors, so not good there. And then surging prices of luxury goods, they're turning off some shoppers. Bain & Company says it will likely force labels to rethink those increases, maybe their wider product offerings. Maybe a sale? A girl can dream, right? I mean, that is
she
your
dreamt
Bloomberg
last
Business
night.
Flash.
She walked in with a bag.
Tom and Paul.
It's promotional out there.
Yeah. Yes.
I'm saving you money.
That's right.
It's promotional out there right now.
Yep.
The avocado thing, back up. Is this a food issue with the avocados?
Yeah, well, you remember, I think it was it 2022 when they had the same issue and it was stopped for like 2 weeks and it was a problem. Avocado prices started going up, so we'll see where this goes, but it's just starting.
Okay.
Right
Lisa Mateo there with the avocado report. Thank you so much. There's a debate Thursday. I mean, this is important, the CNN debate. And David Gura will be doing the debate.
Okay.
And is it this Thursday or a week from Thursday? I'm sorry, my head's spinning. But there's a debate.
Yep.
And David Gura is going to the debate
Very
to
good.
really try to talk to people
Okay.
about how they're getting ready for it, given the ecumenical turmoil of the two candidates. Let's
Yep.
be nice about it.
It kind of feels like this could be a make or break for both sides. Getting these two together. It's been a while, I guess. 4 years, but
They're
and a lot has
sitting
changed.
down. That's bizarre.
And they're turning off the mics when you're not speaking.
Yeah, they started
so you can't
that.
talk over
Yeah.
to people.
Yeah,
So apparently
they
there's
started
a
that
little-
because one of the candidates was talking
Yeah.
nonstop. And also, I don't think there's an audience.
No? Okay.
I don't know if Gura can be the audience, but we're sending David Gura down with his
Okay,
great perspective.
very
Look
good.
for him in the big take, and I'm sure they'll have a lot of that as well.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages around the world, brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading turnkey. Custody solutions, no ticket charges, no conflicts of your interests. Only at ibkr.com/RIA. ibkr.com/RIA. And thank you to Interactive Brokers for our studio as well. Lisa, you sent me the list, which I've already forgotten because I'm in a heat wave.
It's okay.
But it was brilliant.
You know what I like too is that we always have this conversation about colleges and the system and how much it costs. So this one really stood. You remember when the University of Arts in Philadelphia closed down, left all these kids in limbo?
Which it's been around forever. This
Yeah,
cost.
like 150 years.
Yeah.
Yeah.
Okay, I remember. I know this one.
Yeah, so it left these kids. The problem was that a lot of the colleges had already cut off admissions for the fall, so these kids were left in limbo. But it's not just UArts. I mean, falling enrollment causing other schools to close their door. But this is the point I wanted to point out. This is from the State Higher Education Executive Offices Association. They say nationally, as many as half of students whose campuses close, they don't go back to school.
Yeah.
And that's a big problem. The others who do go, they lose credits, and then they wind up paying more money somewhere else because they lost those credits. They have to
They lose the credit thing.
and they have
we
to
had
take
a
them
family
over
member
again.
do that. They basically had to do
And you pay more.
Well, you
do-over.
pay more, but
Yeah.
there's there's a lot of schools that say, we're not going to take that course. We're not going to take that grade. This is a really important idea, Paul, because there's such a focus, particularly in the East Coast, good morning East Coast, on 12 schools.
Yeah.
Or maybe 100 schools.
Yep.
And there's a zillion other schools out there going, okay, how are we going to pay for the faculty?
I know.
Do we really need athletics?
Yep.
There's a lot of that going on.
And if they
right now.
don't have an endowment or a big enough endowment, they're just so dependent upon the tuition that they have very
that's
little...
a shtick in Europe.
Yeah.
The European schools are basically broke, and so they want Americans badly.
Yep.
I mean, I'm speaking as a
you see it,
generalization.
kids around here in the tri-state area are going down to the SEC schools, the Alabamas, the LSUs, because they'll pay full out-of-state tuition, and the states love that. So, and that didn't happen in my day. But anyway.
Okay. Next.
Yeah. Okay. So companies trying to get workers back to the office. We've always been talking about this.
No.
They've been offering free meals, yoga classes, all these kind of things, parties. Okay. But the new tactic is to get workers back to the office by getting rid of hot desking. I didn't understand what this was until I read the article. It's a thing. It's when people share desks. So you don't have a permanent desk. You come into work with, let's say, your laptop, and you had to find a desk. And it's like this scramble and search for a desk. It's sparking some hygiene concerns. People are saying they don't like it. They have to wipe everything down. They don't have their fancy chair. They have to search for a chair. So a lot of companies are changing this. They're trying to give workers back that permanent desk, with the family pictures and all that kind of thing to make them feel like it's home again.
So it's kind of like the anti-WeWork,
Correct.
I mean, yeah, exactly. Okay, so that WeWork thing, it works for a lot of companies. A lot of companies that works great for, but for some other companies, you need your own space.
May I suggest that everybody's overthinking this, and it's just with the pandemic, there was no commute.
Right.
Yeah.
And
that's
now
where it
there's a
started.
commute.
Yeah.
On behalf of all of Bloomberg surveillance, we're Commute Pro.
Exactly.
We want to commute. Good morning, Apple CarPlay and Android Play and the Bloomberg Business app. It's free for your commute. We'll make your commute safer and better. Thank you for that promotion, Lisa. Next.
Check. All right. Football's Christmas games on Netflix. How much are these ads going for? Okay, this is according to Adweek. 5 ad packages for pro football's Christmas games on Netflix will each cost at least $5 million. They're categorized by when they air, but each package has to include at least 8 30-second ads for each company. We're talking about Gatorade, Verizon, Visa, Microsoft.
But these are like Super Bowl almost prices.
Yeah, because if you think about it, I mean, the Super Bowl, $7 million for a 30-second spot during the Super Bowl 58. So it's close to it, but they have a choice. They can go to the Chiefs-Steelers game that's set for 1 p.m. Eastern, and then you have the Ravens-Texans at 4:30 p.m. But you're just starting to hear about how much people are going to pay. Companies are going to pay for these ad packages just for Christmas Day.
Yep.
It's going to ruin my Christmas Day. Okay, we used to say I'm going to watch movies. Now I'm stuck watching football.
Did the Detroit Lions play on Christmas Day? Is it Thanksgiving?
They're Thanksgiving, right? Aren't they Thanksgiving?
Nope. Chiefs, Steelers,
Or just lay down the law in the
Chiefs,
Mateo household.
Steelers.
Yeah,
Chiefs, Steelers.
Ravens, Texans.
Yeah, maybe Steelers would be the 2 games. Okay, you got anything else, or is that it?
Yes. Okay. We had a guest yesterday who was talking about how our kids wanted to be social media influencers. Please. So that stood out to me, and I found an article today that actually says they're not making much money. So she can go and show her kids this article from the Wall Street Journal. Platforms are giving out less money for these influencers. Brands are being pickier. TikTok possibly shutting down in 2025. All these things going against it. How much are they really making? There's Neo Reach. It's an influencer marketing agency. They said last year, 48% of these creators earned about $15,000 or less. That was about it. And then you had maybe 13% who did like the 100,000, mark.
So if Dad says go get a real job, does that count?
Tell them to go to the Wall Street Journal, read the article, send it to your kids.
Lisa Mateo, thank you so much. The newspaper report, Lisa Mateo, thank you so much. I love doing the song things we do. I learn stuff because I look up the song and Glenn Fry. He's like ginormous.
Love
Eagles.
Yep.
Like Take It Easy and all that. They called him up and they said, we'll give you $15,000 to sing this song. And it was like a ginormous hit.
Yep.
I would have thought he got $1 gazillion. Right. But he just said, I'll do it.
Fry.
Eddie Murphy?
Love him.
I'll do it.
Yeah.
Glenn Fry, Heat. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, an incredible hour of conversation for you. Mona Mahajan will join us. Dana Telsey, retail sales in 30 minutes. Jeffrey Rosenberg from BlackRock will be with us, and we're going to get strong with Ian Shepardson here in a moment with Pantheon, and we're going to get right to that. So I'm going to get through this quickly. Yep. Paul, it's a bull market. That's all we got to say.
It's a bull market. Here we got the S&P 500 up double digits again this year. Decent earnings. Got a Fed that's looking to ease. That's all we need, I guess.
This is the day it turns and goes south. Bloomberg Surveillance brought to you by CohnReznick Advisory Assurance Tax. Their industry advisors can customize solutions to help your business create value and increase resilience. Visit CohnReznick.com/advisory. Churn to the market, dollar stronger, Bitcoin south. Lisa Mateo, the Bloomberg Business Flash.
You got it. We have futures taking a little bit of a breather after the S&P 500 and NASDAQ Composite. They both closed at records. Information technology, that was the S&P 500's best performing sector. Chip makers having a great day, especially Broadcom led the way. Shares right now up more than 2%, putting the stock on track for its 8th consecutive session of gains, the longest streak of the year. Let's check in with S&P futures right now. Little changed at 5,546. We have Dow futures, little changed as well. NASDAQ futures up about 0.1%, 29 points at 20,220. All right, we'll get to the bond market. The 2-year yield 4.78%. That's up 1 basis point. The yield on the 10-year 4.29%, and that's up 1 basis point. To earnings we go. Shares of homebuilder Lennar, they're lower, down more than 2%. The company posted profit. It was bigger than expected, but the orders forecast for the current quarter, it fell short of estimates, and that's why those shares are lower. Shares of Boeing down nearly 1%. Its CEO Dave Calhoun faces that very public grilling from U.S. senators accusing Boeing of putting profit before safety. That's taking place today. And EV startup Fisker filed for bankruptcy. Discussions with a major automaker about an investment, well, that ended without a deal. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Always with Ian Shepardson. And folks, I can't say enough about his work, and particularly the effort out on LinkedIn is about the economy. He's got a cottage industry in China. And the answer is this morning, Paul and I don't care. We take immense value across America in talking to people ensconced outside 3 zip codes in Manhattan, maybe the northwest quadrant of Washington as well. In the old days, did you take a carriage, a stagecoach from London to Newcastle, and then you took the train? Do you take the train today in Newcastle, or do you fly?
I take the train. The plane's very inefficient.
Tell us about the election from the River Tyne. I mean, it's industrial, gritty, bombed in World War II. Are there 12 Tories in Newcastle? Is that where we are?
Well, not so much in the city, but in the surrounding towns, the Tories won a bunch of seats in the last election, in the what was known as the Red Wall, the Labour Red Wall. And the Tories won a bunch of seats there, which they're going to lose all of them on July 4th. And they're probably going to lose some other seats that they've held for decades around the city and out in the countryside. So it's going to be a really big change. They won those Red Wall seats back in the last election in 2019, and promised the earth to the people in those seats and delivered nothing.
Right.
So now they're going to lose.
Okay, here's my key question, because I know we want to get to economics and your linkage into the great bull market we're in. But in this year of democracy in India, maybe in England, in the United Kingdom, in France, and then over the United States, there seems to be a primal scream from people saying, we're not getting gains from this boom economy. Clearly, we're seeing that in the United Kingdom. Yeah. Do you predict we'll see the same thing in the United States, where people are just going to say enough?
Well, what's clear here is that the improvement in the labor market, the pickup in wage growth, the very low unemployment rate is just not cutting through to people. And I'm assuming that that's because although inflation is lower, substantially lower than it was, the price level hasn't come down. And that price level shock, just things cost way more than they did before the pandemic, that's registering with people in a way that the improvement in the labor market, all the jobs that are being created in this administration, that's just not cutting through. At least not at this point. And time is kind of running out now for the administration with the election 5 months away. It's strange that this, because we've had such a long period where inflation was very low. And people have got used to not thinking about the price of things because they didn't change very much for a decade. And so now this price level shock, I think, has really come and disorientated people.
Yeah.
In a way that will fade. I mean, prices went up a lot in the 1970s, but we got over it. It just took a long time. It took a very long time. I remember in the early 90s, people telling me that the inflation in the 70s and 80s still wasn't properly beaten. So that was a long time after the shock. So, I don't think that the Biden's going to be rescued by people just saying, okay, inflation's down, we're not bothered about the price level shock. I think that's going to take a long time.
What can our Federal Reserve do? I mean, I guess just follow the data?
Yeah, what matters to them is the inflation rate, not the price level. And the inflation rate's coming down nicely. We had a bumpy first quarter for sure, but I think we're going to have a much better second half of the year. And I think we're probably also going to see a significant slowdown in the labor market, not a disaster or a rollover, but I do think that we're going to see some weaker payroll numbers and probably a further increase in the unemployment rate, which ought to get the Fed moving. I mean, their latest forecast from last week's new projections showed the unemployment rate not rising at all through the rest of the year, and that seems to me to be unlikely at this point. So hopefully when it does start to creep higher and inflation comes down, they'll pull the trigger on rates. Sooner the better.
So we're going to get some retail sales data this morning. How do you think the U.S. consumer is doing by and large?
I mean, okay, but not as good as they were a year ago. Okay. So last year, the big story was income growth was very strong. Real income growth after tax was about 4%, which is like double the long-run average. There was a lot of cash flow around last year. And whereas this year, that number will be more like 1 to 2%. And unless people are prepared to cut their savings a long way, that means spending growth has to slow.
Yep.
So we're seeing some evidence of that now. But, as we've learned over the last few years, these monthly numbers that we get, the retail sales today, they're very lumpy. They get revised endlessly. This is kind of very much a first approximation. But stepping back from that month-to-month noise and the chaos and the revisions, I do think that consumer spending growth is losing a degree of momentum, and it's 70% of GDP almost. So if that momentum continues to fade, it's going to become more of a problem.
Well, Ian Shepardson, frame out your real GDP and then GDP plus inflation, nominal GDP, 12 months forward.
Yeah, low. I mean, I think growth...
Sub 4% nominal?
About 4% nominal. So, 2 or less real, and slightly above 2 on inflation, so coming down.
Do that. The adult says 4%, where I want 3.9 because it's worse.
If only we measured it to that degree of accuracy, which we definitely don't. So, I mean, this is a lot slower than we've been used to for the last few years. Of course, I think that'll be very helpful for inflation because the slower growth in consumption is going to start putting pressure on retailers and consumer-facing businesses who've just had a fantastic run of margin expansion during the pandemic and beyond, all driven by stimulus spending, which has allowed them to raise margins in a way we've never seen before. And that's added to inflation, and I think it's going to start reversing pretty soon. This is margins are a quarter of the core PPI, for example. So we could see, I think there's a very good chance that we do see inflation next year coming in way lower than the Fed thinks, which is why I'd like them to start cutting rates now. Newcastle upon Tyne, it is the northeastern part of England. How's the economy there? And what drives the economy in that part of it? Well, I mean, it was post-industrial in the 80s after Thatcher. Now it's much more a services economy like all developed economies. It's been a difficult few years because Brexit has been very damaging to the whole UK economy. The drastic austerity in the public sector has been very damaging to demand. And the whole country is very sluggish.
I mean, you can't get the guy from AC Milan to go in there. I see what Kieran Trippier's doing. Forget about football. Let's go to Brexit here. Whoever wins this election, does the United Kingdom begin to un-Brexit? I hope so, but I'm not holding my breath. I mean, I do think that, over the next decade, maybe, the UK will rejoin because it's such a disaster
It was always going to be a disaster. That's the tragedy of it. Nothing that's happened as a result of Brexit is a surprise. It was always going to be a disaster. But public opinion has moved back in favour of rejoining the EU. It took a long time, but it's very clear now. But politicians regard it as just like an issue they just don't want to talk about. It's the third rail of politics. It's just, let's not mention Brexit. And it's very frustrating because it is the issue. You know, the UK economy was rendered poorer overnight by Brexit because of the crash in the exchange rate. The jamming up of trading arrangements because of the bureaucracy imposed by being a third-party country for the EU is excruciating. It's been an absolute catastrophe. But the tragedy is that none of the political parties really want to talk about it.
Out of time, don't be a stranger. Ian Shepardson, thank you so much. When you come back, we'll talk about Newcastle football.
Yeah.
John from Capri. Do you know the Pharaoh's over at Capri again?
Is he?
It's just amazing.
Player.
You know, Anne-Marie Horton goes to Puglia, and Pharaoh's on some boat floating around.
Right. I went to Nashville a couple of weeks ago.
That's not Capri. Ian Shepardson, thank you so much with Pantheon this morning. With our news in New York City is Michael Barr.
Tom, Paul, Lisa, President Biden is making a new effort to protect hundreds of thousands of undocumented migrants from deportation while trying to blunt criticism about his crackdown at the border. Bloomberg's Jody Schneider has more from Washington.
This would be his administration's most broad effort so far that would offer deportation protections while he's still trying to counteract a lot of criticism he's received by some allies of his recent border crackdown, particularly on the left. Under this policy, eligible spouses and children of U.S. citizens who've been in the country for at least a decade would be able to apply for the so-called path to citizenship, lawful permanent residence, without being forced to leave the country.
Bloomberg's Jody Schneider says the White House estimates this change would cover about 500,000 undocumented spouses and about 50,000 children. The post-fire burning in California, about 60 miles north of Los Angeles, has already burned more than 15,000 acres and only 20% contained. In the small town of Gorman, people have been urged to get out. Crews evacuated around 1,200 people from Hungry Valley State Recreation Area, while Cal Fire is only reporting an injury from the fire. D.C. Williams with the California Highway Patrol has had to clean up several wrecks from drivers stopping on the highway to get snapshots of the blaze.
People trying to look at the fire, looking at the smoke, looking at the flames that they could see. We had people stopping in the center divider, right shoulder, taking those pictures, which is extremely dangerous.
The cause of the fire remains under investigation. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Have you been to the Sphere, Paul?
No, but I really want to go because it looks phenomenal.
Doug Cass. You know, Cass
of course,
is killing it.
I know. I know.
I don't know if he's short
Palm
now
Beach,
or
the
he's
Hamptons,
in cash or selling his place in Florida. I don't know, but he's got like rock star seats for the Eagles. He's in like section 105.
Yep.
And like non-scalped, it's $700.
Yeah.
So you know it's like $1 zillion over that.
Yeah, I mean it's the U2 concert series. I mean was extraordinary. I wish I had seen that.
Look at this. The seats Cass is looking at are $4,100 each.
All right. Well, you know,
a hitter like him, you know, it's not a big deal.
And then you got to buy a beer, so that's another,
$25. Doug Cass, thank you so much from Florida here. The Eagles, October at the Sphere in Las Vegas. Thank you to Glenn Fry for the heat is on there. And the heat is on. Be cool. From New York, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen. This is ahead of more economic data out today. Bloomberg Economics says U.S. retail sales may show a slight rebound in May, climbing about 0.3% from the prior month on price cuts. And gains in industrial production may only be modest, with manufacturers expecting demand to cool. Right now, we have NASDAQ futures up about 0.1%, 36 points at 20,229. Dow futures and S&P futures are both little changed. We have the two-year yield at 4.77%. That's little changed. The yield on the 10-year, 4.29%, and that is little changed. Commodities, we have spot gold lower, $2,314 an ounce. Brent crude, $84 a barrel. WTI crude at $80 a barrel. Over to Bitcoin right now, lowered at 65,000. And that's also touching off some more crypto declines. We have Coinbase Marathon Digital Holding down more than 1.5%. Companies making news. We'll start with Tesla. Reuters reporting Elon Musk telling his staff the company's working on offering stock-based compensation for its top-performing workers. And that's not all Musk is working on. Documents show he also plans a Venmo-like payments feature for his social media platform X nationwide. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. It is out today, and it is definitive on Wall Street. People that aren't in entertainment and media, they get a copy. You will not get it from us. We protect the copyright of all of our guests, including Michael Nathanson and Craig Moffett.
Yep.
Moffett-Nathanson, cord-cutting monitor, the first quarter of this year. Paul, I skimmed 6 pages. It is brutal.
It is.
There's
brutal.
no other way to put it.
No. So the cord cutting, I mean, just simply put, 10 years ago, 90% of the households were taking some form of pay TV, cable, satellite. Now that's 60% going lower, and that just crushed the economics of the global entertainment.
We got to get to our great guest. I'll give you one sentence, folks. Today, it is far less clear that there is a floor. Craig Moffett and Michael Nathanson, definitive, published moments ago. Thank you, Craig Moffett, for that.
The best.
No, also the best. Jeffrey Rosenberg joins us now with BlackRock. And it's not in a Fed day. We're all lathering about the Fed. So, Jeff, we're not going there right now. Jeff, what are you doing in a systematic bond portfolio, a mixed multi-sector bond portfolio, when spreads are priced to perfection? What is your action plan as you adjust into the second half?
Yeah, it's a great question, Tom, because spreads are not particularly attractive. We're at or through mid-cycle tights, so there's not a lot of kind of anticipation of price performance from spread compression here. And so generally it's a more defensive positioning because you've got more downside than upside, but your upside is basically the carry. And the carry is attractive mostly for the total yield, less for the spread. So we've been allocating, less than we would otherwise be to the lower end of high yield. There's a bit of a different story there and a bifurcation. Really big bifurcation, kind of mirrors the bifurcation that we see between, say, small caps and large caps in the equity world. And that bifurcation is kind of double Bs to triple Cs. That's where you really see a very different part of the market. So you got to play a lot more defense in that part of the market. It is pricing appropriately for the default risk. Aggregate, the default risks are very low, so we feel pretty good about the spread exposure that we're taking. We think you can take that spread exposure, but again, you got to think about that as carry and not price appreciation.
Paul Sweeney, here it is, the Bloomberg Total Return Fund, the old Lehman Index.
Yep.
Bloomberg has it now. It's definitive. A breakout, price up, yield down. I got a little better price performance in the Total Return Index.
Exactly. Tom, Jeffrey got his master's in computational finance at
Carnegie Mellon.
I mean, that's math, right?
He sat there one day and he looked at Tepper and he said, "Should I go robots or Tepper?" And he went Tepper.
He went Tepper. I mean, who does computational finance from Carnegie Mellon? Way too much math. So, Jeffrey, Tom was calling out earlier today. He noticed that the Home Depot comes to the market with a $10 billion debt offering. They had $47 billion in demand. Talk to us about the investment grade market. People are just dying to get paper and get yield. Is that kind of what you take away from a deal like Home Depot?
Yeah, I mean, if you look in the credit markets, and I talked about, probably the weakest part of the public credit markets, which is kind of triple C part of high yield. But if you talk about investment grade, it's a very different story. And really, again, this mirrors this kind of small cap, large cap story in terms of what companies' interest rate sensitivity is, right? A lot of questions about, where is the bite of higher interest rates being felt. And it is really this kind of bifurcation that we're seeing. And the investment grade side is really well prepared and well positioned. Partly that was because we had such a long period of zero and low interest rates that allowed companies to really fortify their balance sheets, extend debt maturities. Most of the investment grade cap stack is in fixed rate debt with long maturities. And so you're seeing, very strong interest coverage performance, even in an environment where you'd expect some degradation given the increase in interest rates. And there's just not that much rollover that's happening. So the fundamental side of investment grade credit risk is very supportive. You have a tremendous amount of demand, and you haven't had an incentive, and this is the first case in a very long time, you haven't had an incentive for issuers to kind of front load their refinancing. What they're doing is they're pushing it out, obviously, because the coupons that they have on their balance sheets are the lowest ones that they're going to have. So it's reducing the amount of kind of rollover issuance that you would otherwise have. And so when you see these new issues come to market, there's just a lot more demand for them, as you're highlighting in this Home Depot case.
John Templeton, years ago, there will be a shortage of bonds. You say demand's insane. Paul correctly brings up Home Depot, where we had 100, I can't remember now, we had like a 137 beat pickup in the 40-year yield from what was expected, a lower yield, a more attractive return because of demand. Jeff Rosenberg, is there a shortage of bills, notes, and bonds?
Well, Tom, we got to be a little careful about that because, we're going to switch the lens from corporate issuance, where balance sheets have been, strengthened. They've extended debt maturities. They've been relatively conservative, especially on the investment grade side. And then flip the lens to the government side, U.S. Treasury issuance. We have a very different picture. And obviously that's the fiscal debate, the unsustainability of fiscal policy, the increasing amount that the private sector will have to fund that issuance, and the eventual raising of Treasury coupon sizes. Been hanging out kind of in bills here, but we're going to have some pressure eventually. We think that pressure will show up in the back end. And it's not going to be a case of too little supply. It's going to be a case of the markets having to digest ever increasing amounts of supply. And that we think, is going to end up being a pricing story for the back end of the curve. So it's going to be a different story than what you're talking about here for the investment grade market.
Jeff, the next time you're on, I want to talk about Modigliani and Miller, who at your Carnegie Mellon invented how we think about capital structure. But just simply to say, are we going to see new corporate bond issuance like what Home Depot did yesterday? Yes, this week looks like a $30 billion week is one of the reports from Bloomberg.
Yeah, I mean, in terms of optimal debt structure, I think, particularly, again, on the investment grade side, a lot of companies, got to the right point given the prior interest rate and tax regime. Another thing that we're going to talk about here, as we move through the election and the fiscal policy debate is corporate taxes. And, it's the corporate tax rate and the deductibility of interest. And there were some changes in the tax code that limited the deductibility for highly leveraged firms. That changes the optimal default point. But for investment grade companies, as you see that tax rate goes up, you may see, some more attractiveness in terms of issuance, and that can shift how much issuance we're getting for that tax.
Jeff, we're out of time. Jeff Rosenberg, never enough time with BlackRock. Thank you. We'll do this again soon, to say the least. Red and green on the screen. Retail sales next from New York City. Stay cool. Bloomberg surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We're just moments away from retail sales figures for May. Ahead of that right now, we have S&P futures, Dow futures, little change. We have NASDAQ futures up about 0.1%. We'll take you over to the bond market. Right now, the 2-year yield, 4.76%. That is little change. And we get to the 10-year yield, 4.26%. And that is down 1 basis point. The numbers are starting to come in. If you look at retail sales, month over month for May, it was survey was for 0.3%, coming in lower, coming in about 0.1%. You take auto and gas out of the picture. The survey was for 0.4%. So you see that difference there. Tom, what's your reaction to it? Are you going for the excluding cars and gas?
I'm excluding fancy shoes. We're going to talk to Dana Telsey about that in a moment. Equities lift here off the news, obviously modeling in a Fed rate cut. We're not going to talk to Dana Telsey about the Fed. 10-year real yield, something I watch here. This is the inflation. It comes in 2.03%. That'll be interesting to watch. But within range,
Tom,
light in
revisions.
the revisions.
Revisions last month, Tom, lower than expected. So just kind of calling into question maybe a little bit of the health of the retail consumer.
Economic indicators. We try to do it right for you. And, of course, the economic indicators brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support in technology. We have in the studios the #1 voice in retail, and we're going to go to luxury because that's what's out there.
And Tom, another C.J. Lawrence.
Yeah, I know. She's gifted. I mean, she's gifted. C.J. Lawrence and all that. Dana, I'm going to cut to the chase. The Louis Vuitton store at 57th Street in 5th Avenue is a gorgeous, modern, white glass store of windows that I can't afford. Arnault wants to bulldoze it and build a new building. 5 people have said, why? Why?
The reason why companies, especially luxury companies, reinvest, because the ante keeps going up and you have to be able to give new experiences to that luxury consumer so that they'll pay those dollars for those luxury items. Look what he's got across the street. He spent a fortune on Tiffany. The Louis Vuitton store hasn't been touched in years.
Right.
If he needs to have another brand that is on the same par, you have to invest.
Is luxury the AI we don't talk about? I'm looking at Hermes's estimated forward PE. It comes down, Paul, to 47 times earnings. I mean, help me here with the effervescence of the luxury business. Is it NVIDIA-like?
It feels like it is for one reason. The creative products that they have, but the continued expanding customer base. Baby boomers, one of the wealthiest generations, is passing down that wealth to millennials. You look at the Chinese consumer and see who's
What's China doing right now? What are they? It's a doom and gloom. You're the only one I know. You're the only one I know optimistic on China.
No, not optimistic on it. We're still having very cautious trends out of China. Where the Chinese are spending are within China or within other local Asia regions. You're not seeing a return really to Europe. You're not seeing a return to the U.S.
Yeah, I see that when I walk to Penn Station every day. I don't see them on Fifth Avenue.
So you're going to walk to Penn Station today to sit on a chair? Are you taking the Sikorsky home?
Yeah, I might have to. I might be going to Hoboken today. Little problems with Penn Station here today. Dana, talk to us about the U.S. consumer here. We got some retail sales numbers today, a little bit weaker than forecast. Talk to us about, I hear there's a bifurcation in the marketplace with the consumer.
So overall, I call the U.S. consumer, and today's numbers definitely highlight it, squishy.
Yep.
We have a squishy U.S. consumer. And frankly, it's every income level where we've seen a moderation in spend. And we've seen that trade down. Look where the big sales increases are coming. Same-store sales increases of better than 3% at the off-pricers like TJX, Ross Stores, Burlington. They're getting the benefit of the trade down. And you take a look at the discounters. They're getting that too. But overall, luxury sales are moderating. If you have newness and new trends, it's working. Tom, you're going to like this. Wide leg denim jeans. The wider, the better, and that's the trend out there.
Good. Better than skinny jeans, right?
We go to surveillance fashion icon Lisa Mateo. Lisa, we going to see you in wide jeans?
She is correct. I was told by my daughter that I am not cool because I wear skinny jeans. I have to go with the wide leg jeans instead.
God, see what you learn on surveillance. Rich, make the single best idea with Dana and Lisa today. Paul, continue.
So if I look at a Walmart, for example, what am I seeing at the Walmart basket? What's in a Walmart basket these days? Is it more essentials, less, discretionary?
So think about what Walmart is. Nearly 60% of their business is grocery.
Wow.
So you're getting grocery in there plus the other merchandise. And it's a combination of both. Mm-hmm. And you're seeing consumers today, even with essentials, they're trading down to private label. I've heard about the pet stores recently, where consumers for their pets, they're trading down to private label goods for their pets even.
We'll talk about single best idea, but I want to talk about the big money that everybody that follows surveillance follows with luxury. I remember, I think it was Laura Piana, it was like $1 billion transaction. It changed the industry. This is years and years ago. Todd's of Italy, which I would say is a pretty conventional brand, spend over $400 million on a shoe brand nobody knows in America, Roger Vivier. Explain why someone spent $400 million on a shoe that basically no one knows in America.
Because what they see is the opportunity and acquire Roger Vivier. They feel that they have the creative talent to enhance the brand, open physical stores and distribution, and make it a global brand. And they feel that their insights into the global customer will help drive that brand. When you think of brands that are smaller, that where can you grow? I mean, I think one of LVMH's most significant transactions of the past few years has to be Tiffany. And look how they're reinventing Tiffany.
Is that working for them?
Yes. They're getting more profit out of Tiffany. It's catering to a younger customer now. They're modernizing and updating the stores and capturing a wider customer base.
Tom, Roger Vivier, it's on East 60th Street. We can go there and check it out today.
Yes, she was there yesterday.
Okay.
That's why I brought it.
Thank
Is it
you.
promotional right now?
No.
She walked in the door and said, I'm saving you money. And is luxury promotional right now?
No, inventory levels are lean for luxury. It's not promotional.
Okay.
The changes, you have one of them raising prices like Chanel, the others are holding, and they're working on newness in order to drive demand.
I don't have it in front of me. I'm sorry, I'm not briefed on it. But Dana Telsey, did Chanel just throw somebody out on the street and they're going to bring in somebody new for design and all that?
Looks like someone new is coming,
Give
even
us
though
the
she had
backstory.
been there for
Could it
over
be
30
you?
years. No, it is not me.
Okay. What does Chanel need to do to recapture what they have?
I mean, they're doing pretty well in terms of the gains they had, but I think overall, the continued modernization and cut out the big price increases. They're not Hermes. Yes, they're a luxury brand, but you can't go to the ilk of something
So
like
is
an
Miu
Hermes.
Miu and Valentino and all the other outrageously expensive ones are all going to pull back prices?
No, they're not pulling back prices. They're at the right level. Chanel won higher than everybody else, trying to capture Hermes, and Hermes is in a different league than anybody.
I didn't know that. Single best idea.
Yeah,
Dana, what are
please.
you talking to your clients about these days?
Target after that conversation?
So there's a couple that we're talking about Bath and Body Works and the inflection point to growth in the second half of the year. We're talking about TJX and the continued drumbeat of increasing market share and increasing gains. We're talking about Costco because of the market share it gains. And we're also, you talked about denim jeans. We're talking about Levi's.
Levi.
Okay, explain
having a moment.
Levi. Explain Levi. Levi's
That's
is
my
saying-
brand. That's
They're
my
in
brand.
San Francisco right now saying we got to go wide jeans for Lisa Mateo.
Yeah, and it's working. Not only are they doing wide legs for Lisa, but take a look at their wholesale business where they've strengthened the distribution channels that they're going through. They're doing outfitting top to bottom with lifestyle. Buy a shirt and buy the jeans, not just one.
Right.
And they're capturing more of the women's customer.
And finally, the miracle that is Abercrombie and Fitch. Are you kidding me? How did they? I mean, it's like GameStop. How did they do? And this is legit. How Dana Telsey, over on Fifth Avenue, they had Hunky Boy out in the street, lined up. That all went away. Then what
Stocks
happened?
doubled.
Then what happened? Fran Horowitz came in as CEO. She was there since 2014, promoted to CEO. COVID gave her the time to assess data. The store wasn't working. What do we do? She took a look at where she wanted her customer to be, 25 to 35. What do you need to give them? outfits, not items. Where do you need to sell it? In stores that are inviting, took away the fragrance, turned up the lights, and now you can buy outfits, and you wouldn't know it's the Abercrombie of the past.
One final question. Well, Paul, please.
No, I'm just amazed by it.
One final question. I think it's important for our Boston audience. Good morning, but across this nation, what is the pixie dust of TJX? How did they execute where so many others failed?
You know what? They're people. They have the tenure of talent that have relationships with brands and merchants that they're able to assort the store better than others, capturing a wide price assortment, capturing better brands at a value, and opening compelling stores in great locations.
What are the department stores? Your heritage, your heart and soul is Bergdorf Goodman. Is it around in 5 years?
I think Bergdorf will be around in 5 years. I don't know who's going to own it, but I think it'll be around in 5 years.
Do we still want to shop at department stores, or is Lisa going to be over at whatever it's Vivier today?
Yeah.
You need new life to be breathed into the department stores, because otherwise she's
What would
going
you
other
do?
places.
What would you do to your Bergdorf? Lisa put the windows back on Fifth Avenue. That was daylight. How original.
Well,
What
look
would
at
you
those
do?
views on Fifth Avenue Bergdorf's has.
What would you do to Bergdorf?
I mean, to Bergdorf's, I'd almost take a look at my customer base, invite them in, capturing that younger customer base, have events in the store, and see what exclusives and limited collections designers can give so that you can only get it at Bergdorf's.
Would Arnaud buy them?
That's what it feels like would be the one. Look at La Samaritaine in Paris.
Yeah.
If you visit a La Samaritaine in Paris,
We're going to.
It's beautiful. Absolutely
We're
stunning.
taking the show to Paris in the fall.
I'll join you.
Printemps, right at the top of Printemps, the old restaurant, which
Stunning.
is their used clothes.
Yes,
Did they
stunning.
kill that? They'll use clothes. I mean, all the kids, Lisa, they want to go to you. They don't want to go to Vivier or whatever. They want to go to hand-me-down store.
The consignment shops.
Very
because you
popular.
can get the great deal, the great brands for a lower price.
And old is new again.
There you go.
Okay, Dana Telsey, thank you so much.
Thank you.
It's great. And as Paul said, what Telsey Advisory Group did, I remember the first day she came out, I was like, yeah, whatever.
Well, it's interesting, Thomas, there was a period of time, maybe 15 years ago, where a lot of analysts left the sell side because they changed the business rules. Elliott Spitzer, all that with investment banking, took a lot of the economics out of the business. So a lot of analysts went to set up their own shops. I'm talking dozens of II ranked number one analysts.
Yes.
I can count 3 or 4 on my hand that are survived and thrived. Dana's one of them.
Well, more than surviving.
Yeah, and thriving. It's just it's a tough business.
You should see her do a channel check, like in Hermes. Oh my God, the whole place, the staff freezes. She comes in the door. They just. I
mean, retail analysts.
Leather goods.
Their job is just to go to the malls and go to stores, and I don't know. And they do that on like that Friday after Thanksgiving.
It's 70% of our economy. Are you bullish on retail? Quickly.
Yeah, I think there's opportunities in retail. You know why?
What's your number? Single best buy. Come on.
It definitely is TJX. It's going to keep moving higher.
Dana Telsey, thank you so much.
Just had a nice run this year.
Yeah,
so
well,
far,
they did.
17%.
Like Abercrombie. Can you see me in Abercrombie and Fitch?
I can see you over in New Jersey on the weekends going to the malls, Tom.
Yeah.
You walking around maybe the Short Hills Mall, the Paramus Mall, something like that.
Red and green on the screen off the retail. I don't know where Paramus is. Off the retail report and yields. Importantly, yields are in the 10-year yield 4.24%. To see they get back to a 4.19 would be a huge deal. The enthusiasm, the green on the screen went away in the equity markets. Dollar fractionally stronger is where I'd put it. Euro, with those French elections, the 2 elections coming up, 107.32 on the euro. Haven't even talked about it today. My eyes are failing me. Brent crude, I have an 84 print. West Texas Intermediate, 80.45. And Paul, this comes down to a gallon of gas. I mean, it's just.
I go to John Tucker on that, but he gives us John Tucker gives us the view on the gasoline there. But yeah,
he does. He's sensitive because he's got the Hummer.
I don't know what we're doing getting out in the city today, kids, because New Jersey Transit's having some problems.
So what do you do?
So I will go to Hoboken and take the train west from Hoboken.
Two trains.
I'll take a train. I'll go to the subway to kind of Midtown and then get the path to Hoboken, and then Hoboken train.
Said you could just get the big car.
I had the big car this morning. He paid for that this morning.
Well, take it home. You know, it's a long day. Good morning, Bloomberg Surveillance.
Good morning. I'm Michael Barr.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, we've got red and green on the screen, and this is after the latest economic data. It pointed to this greater financial strain among consumers. U.S. retail sales, they rose barely in May, and prior months, they were revised lower. Interest rates also in focus. Economist at Goldman Sachs are sticking with its call for 2 rate cuts, with the first in September. Right now, we have NASDAQ futures, little change, same for Dow futures and S&P futures. We have the 2-year yield, 4.71%. That's down 5 basis points now. The 10-year yield at 4.24%, and that's down 4 basis points. What's moving the markets? It's online education firm Chegg, up 18%. It announced a 23% cut to its global workforce. Plan for growth that includes new AI tools. You announce AI, everyone gets excited. Shares of Philip Morris falling down about 3%. The company stopped online sales of its popular nicotine pouch brand Zyn in the U.S. And finally, those shares of Adobe, they're lower, down about 1%. The company faces that lawsuit from the FTC. The agency says Adobe just makes it too difficult for consumers to cancel their subscriptions. That is your Bloomberg Business Flash. Tom and Paul.
Thank you. What a great hour we're having. Jeffrey Rosenberg with us on fire. Dana Telsey.
Yep.
It's just, she's encyclopedic.
Yeah,
about
just
it.
Unbelievable.
Mona Mahajan was in the green room taking notes on Roger Vivier.
Yeah, buying retail, baby.
This is the most important conversation of the day, other than talking about wide blue jeans with Lisa Mateo. Mona Mahajan's a real deal. She has one of the most prestigious degrees in the world, invented at Wharton. It is a double degree in finance and computer. When we were kids, we were in awe of the fools that actually went to Penn and did this Wharton double bachelor's degree. It was like the holy grail, like Williams, PP&E, and
I'd have been down in South Philly having a good time, eating some cheesesteaks. She goes, finance and computer science.
Went to Harvard and, did the thing. But this is seriously, folks, in this bull market, this is really important. With Edward Jones, Mona Mahajan, what do you do if you're not in this bull market? Don't give me dollar cost average stuff. Do you plunge?
Yeah, look, we recently ran some numbers that show the average S&P 500 bull market lasts about 5.6 years. You're up about 192% in price appreciation. And keep in mind, even if you take out the last couple of really big ones, it's still 4.3 years and 125%. Where are we now? Well, we're about a year and a half since the lows in October 2022, and we're up about 50%. So could you argue that there's still time on your side? Is there still price appreciation ahead of us? History would certainly argue that. And so if you haven't gotten in yet, don't fear that you've missed the big run. History tells us that you could have a couple more years to go, and certainly the backdrop that we're seeing currently with not only the Fed potentially cutting rate, inflation, bumpy path, but maybe bumpy path lower. And we're also seeing, yes, perhaps a cooling in the economy and the consumer, but certainly not a recessionary environment. So good backdrop. History's on our side. By the way, we do have an election coming up, which could create some volatility, but we'll talk about that later.
All right. So, folks tell me, and I learned in my business school that for a healthy market, you need some pullbacks, 5, 10, 15% pullbacks. I guess that 5% we had in April, is that it?
Yeah, that was a modest one. And you have a great point there, because any given year, 2 to 3 pullbacks, and not only 5%, we're talking 5, 10, 15% are the norm. We had the 5.5% modest drawdown in April. Look, when we look at election seasons, what we do see historically is in the 6 to 8 weeks following, prior to election day, we do tend to see pullbacks, and those can be, in the 7 to 10% range. But interestingly, in the 6 to 8 weeks after, we do start to see a better market environment, perhaps because some of the uncertainty is lifted.
How about valuation? I was taught that valuation matters. We have seen some good earnings over the last several quarters. Are they enough to support this market?
Yeah, it's a great call out on valuation, because certainly last year S&P earnings growth was about 0 to 1%. Everything we saw in that 24% rally was a valuation-driven expansion. This year, we are expecting earnings to be closer to 11% for the S&P 500.
You're modeling 2024 double-digit earning growth.
Double digits. Hopefully we get past that 10% mark, but we are seeing it. Importantly, it's coming not only from tech. Q1 was tech driven, I'll give you that, but as you head towards Q3 and Q4, we're looking at sectors outside of tech that are driving earnings, and that is where we see probably, if we're going to get the broadening, it'll happen in that time period, as the Fed is also
The heritage of Edward Jones is spectacular. It's people, they're waking up, they're going to work, they're making money, and they're trying to put it aside. How scared are they? To me, you go higher when people are scared. Are people still scared to go into the market?
Yeah, and that's a good point on Edward Jones. 101 years we're in right now. A fantastic history, supportive of the retail client. Our clients are long-term investors, and we tell them, look, don't fear politics. Don't let politics.
Should they fear a 5% money market fund?
A 5% money market fund is great, but we're up 13% in the S&P 500. And keep in mind, you're making a great point, because a lot of retail investors are salivating at some of the CDs and money market rates that are out there. There is a reinvestment risk to that. As we think 6 to 12 months, as you reinvest those CDs, what rates are you getting? And by the way, you don't want to be too overweight cash, because we know historically cash tends to be a lagging asset class over a longer period horizon. So we still like the balanced portfolios, more traditional equity and bond portfolios. And we're in this AI cycle as well. We want to participate there too.
Well, on the fixed income side, I mean, I guess a lot of folks are saying I can get almost 5% in a 2-year treasury. Should I just stay there, or should I take some credit risk?
Yeah, within investment grade bonds, we are starting to see a little bit more attractiveness in extending duration here. Of course, historically, again, the best time to get into an investment grade bond and a longer duration investment grade bond is when yields are towards a peak. And if we think we're towards a peak in the Fed funds rate and yields, that is historically the best time to start extending your duration. So that's where I would say cost average in over the next few months. You'll probably get some great opportunities.
Is your world changed? And I go to the synthesis of computer and finance at Wharton. Has your world changed because how we do the stock market has changed? We used to all read Value Line. I trip over it once a month. Securities analysis was the vogue, and now we're doing fractional share purchases at Edward Jones or wherever. Does that change how we look at a bull market?
Yeah, look, quantitative investing has become a bigger part of the market overall, and it's been a bigger driver of the volatility as well. We have more institutional investors investing, but for the average retail client, we want to make sure they understand the value of compounding and getting in for a 30-year period with an S&P that still averages about a 7% return more in the more recent years. That is how you create and build wealth, and that is how you not only meet your financial goals but exceed them. So that is really what we want at the heart of this. We want investors to know, no matter when you get in, if you're in it for the long run, if you use volatility to your advantage, you will, regardless of the near-term headlines on a longer-term perspective, you will probably meet or exceed those goals. So it's a great reminder in the core lesson of Investing 101.
How about alternatives? I mean, do Edward Jones clients, do you talk to them about having alternatives as part of their portfolio?
So slowly and surely, we will be talking more and more about alternatives. What we'd say broadly, of course, is one, you have to have the liquidity profile in order to invest in alternatives. Two, alternatives were doing great in the free money environment when rates were low. We're now in a different environment where alternatives may not be what they once were. But what we would say is, for some investors who need the diversification away from obviously equities and bonds, and are looking to invest in early stage next generation companies, that is really where we find alternatives most attractive. When you get those new AI companies that probably those folks are looking at first and foremost. So
don't be a stranger. Mona Mahajan,
thank you
so much. With Edward Jones, amid this bull market, red and green on the screen right now. We did a song last week, Blue Oyster Cult. Got a huge response.
Yeah.
Mona, do you know who Blue Oyster Cult is?
Ooh, don't know that one.
Oh,
no, I gotta study something else. All right, I'm Googling it right away.
Thank you, Mona, for putting me in my place. Anyways, we played Blue Oyster Cult. This is one of the greatest songs of all time. It was written for Blue Oyster Cult, and they turned it down.
Really?
They turned it down. So then Bryan Adams of Canada, he's struggling. He's like making it go. He goes, 38 Special. You'll love this song. They turned it down.
Wow.
So it became definitive. Bryan Adams, Vancouver.
Oh,
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, and Lisa Mateo. Thank you for being. I got scolded in the last hour.
Yep.
Android. We're out on Android Play. Android Play is what it's called, and Apple Play as well.
Yeah, Apple. Yeah. So we're out there. It's just we're digital. Tom. That's
We're
where the
digital.
kids are. That's
We're
where the
out
kids
there.
are.
Safer, better. I know Apple Play is going to be a big upgrade coming out along with everything else they're upgrading on YouTube. YouTube is really, really important, and I can't say enough about the live chat. I love this anecdote. We didn't audit it. It's an anecdote from someone listening. Thank you, Stargate, for listening. My friend took her $400,000 rollover, I'm doing the math, 28 years ago, and invested all of it in Microsoft.
Oh,
it's worth $2.7 million today.
Good for her.
That's how you do it,
That's
Paul.
how you create wealth.
You know what's great on this? Scott Galloway at NYU talks heatedly about this. Just figure out what you want to buy it, and basically Galloway says never sell it.
Right.
Through
Exactly
thick or
right.
thin.
Yep.
Microsoft had ups and downs.
Yep.
Thank you for that anecdote. That's really good, Stargate. Thank you for that this morning. We've got a great set of guests coming up. A real highlight at the end of the hour. I'm going to sell the book right now on YouTube. Ruchir Sharma is one of the great, I never use this phrase, I hate it, thought leaders.
Okay.
Except Ruchir Sharma is a thought leader. He's out with a new book, and that is something we'll do on the backside of the hour. We need a train update from Paul Sweeney. We get it right now.
Yeah.
We went to the moon. Why can't we get trains that work in the heat?
I don't know. I've ridden New Jersey Transit for 35 years commuting. I stick up for New Jersey Transit. They get hundreds of thousands of people onto and off of this island every single day safely, more or less on schedule. But some of this hot weather, extreme weather, it's a challenge. So anyway, we're not going out of Penn Station. We got 60-minute delays.
Do they have in the afternoon? Do they have the bar like in Mad Men?
No,
Do
unfortunately,
they have
no.
like
They
the
used
bar
to back
car?
in the day. Long Island Railroad used to have it until just recently. But no. But there's plenty of place to get, adult beverages in Penn Station for the trip.
Oh, there are?
Oh, yeah.
Oh, I had no idea.
Yeah, the pros, we know where to go, Tom.
The Interactive Broker Studios will get us back on track. And, of course, that's the Bloomberg Business Flash with Lisa Mateo.
You got it. Futures. We are taking a bit of a breather after there aren't bars in Penn Station. After the S&P 500 and NASDAQ composite, they both closed at records. Okay, so information technology, that was the S&P 500's best performing sector. You have Broadcom, shares up more than 2%. That's really putting that stock on track for an 8th consecutive session of gains. We'll take a look at S&P futures right now. Little changed at 5,543. Dow futures, little change as well, down about 30 points at 39,200. NASDAQ futures, little change too, up about 4 points at 20,197. We'll head over to the bond market. We have the 2-year yield, 4.71%, down 5 basis points. The yield on the 10-year, 4.24%, and that's down 4 basis points. To earnings, we still have Lennar. Shares lower, down more than 1%. The company posted profit, bigger than expected, but the orders for the current quarter, that fell short of estimates. And shares of Boeing down about 0.5%. CEO Dave Calhoun heading to Capitol Hill today, that hearing on the company's safety culture. And Apple says it's shutting down its Pay Later program. Those shares up about 0.2%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. I have a 62-page agreement with Bloomberg, and on page 2, paragraph 4, it says anybody who's a Fulbright scholar at Duke, Paul Sweeney has to bring in.
Absolutely.
So that's what we're going to do with the gentleman from Schwab.
Duke University's Institute of Statistics and Decision Sciences, where you're earned a Master's of Science and a doctorate. Folks, I spent 2 years on the Duke campus. I have no idea where those people were. They were far away from me. Omar Aguilar, CEO and CIO of Schwab Asset Management, joins us. Omar, what are you telling your clients at Schwab these days about these markets? Tom talks about often the courage to be in the markets. What do you tell your clients these days about being in the markets?
Well, good morning, Paul, Tom. By the way, Paul, it's the old chemistry building. That's where
that's why.
we end up, spending time doing the statistics and decision sciences, on campus. the in general, what we talk to our clients is to stay disciplined to their strategies and look at the long term. We tend to have a lot of fixation now with what we called recency bias, and that's again one of these behavioral finance concepts that gets a lot of the clients to basically just look at the most recent information. I would probably say recency bias even applies to the Fed and a lot of central bankers, where they're just looking at the last data point to try to make extrapolations to the future. And of course, if you look at just statistical models, what you normally do is you see that there's a lot of these regression to the mean that basically looks at, well, the economy seems to be slowing down. We have to see a lot of noise around it. The inflation is going down. We see a lot of noise around it. But, the key for our clients is to stay disciplined and still look at your long-term investment objectives.
So, Omar, what do you guys suggest there in terms of asset allocation here? Is it a 60-40 portfolio? Do you have a lot of alternatives in there? How do you think about allocation these days, given where we are?
Yes, we tend to basically look at it. There was a lot of discussion we had with our clients over the last 3 years, where there was this theme about the 60-40 portfolio is dead. We talk about the fact that during a particular year in 2022, both bonds and equities were down for the year. When you look at the landscape today, stay diversified is another one of these concepts that we continue to just emphasize to our clients. And the 60-40 portfolio is a perfect example. The 40% in fixed income, is probably the best you can have in the last 15 years, because for the longest time, all your bond investing that we had for a good amount of like almost 8 to 9 years was not providing a lot of total return because interest rates were at zero. When you actually think about today, total return base and even income base, you actually have a little better in there. So what we talk about in terms of asset allocation is, think about international markets, think about, high quality bonds, start extending duration in your bond portfolio, because most likely we're going to see an easing phase from the Federal Reserve. So those are things that for the majority of our clients, they're under investing. Most of our clients tend to be invested in short term. A lot of that they're in money market funds. A lot of those are mostly domestically oriented, and therefore, trying to just use these opportunities to try to, have diversification. Right. It's a big part of our emphasis.
Omar, the bid in the market, the day after day bull market we're in, it starts out just like it is now, flat, NASDAQ, fractional green in the screen, and up we go. Is it just simply cash moving in, elevating the bid?
Well, what we have seen in a lot of the work we do in our proprietary ETFs is that we see this activity that goes throughout the year. And of course, significant amount of the volume that we see, it tends to be in the last hour of the day, just as we get closer to the market, especially as we're getting very close to a lot of these index rebalancing, effects. Now, what is happening at the moment is that, yes, there is a little bit of this rebalancing setup that is happening that continues to overweight this momentum market, because we have been in this incredibly momentum-driven market, where as you start to see this incredible, cumulative effect of growth on these high, market cap stocks, that tends to drive a lot of the volume, up. Yeah. Of course, the part of the counterbalance that is, anything that needs to be bought because it has been sold, too much.
Omar, thank you so much. Omar Aguilar with us with Schwab today with these equity markets. Just the VIX 12.71 says it all. Paul, I'm sorry to tell you this because I thought I had the Sikorsky, but we can't get the Sikorsky today because of the hot air.
Oh, okay.
The density of the air, and there's a point where they say to themselves, we just can't do it.
Just can't do it. All right, well, I'm going to go to Hoboken. And Hoboken, Tom, the Hoboken train station, I'm going to shout out. It's unbelievable.
It's just across the river.
Just across the river, Hoboken, New Jersey, that birthplace of Frank Sinatra. It is a phenomenal train station. It reminds me of those old European train stations. Open air, the trains just roll right in.
It's historic.
You walk right in. There's no fuss, no muss. It's just, if people are going to be in that part of the state of New Jersey, go spend a little bit of time at the Hoboken train station. It's a joy.
It's going to be good. I mean, there's no other way to put it. We're going to have a special guest come in here right now. Lisa, get up and let's get our special guest in here right now. What's going on, folks, is Orioles Yankees. Sit down.
Oh, boy, yes.
He's been in I see him watching a lot of Orioles because the Red Sox are killing me. David Rubenstein joins us now, the owner of the Baltimore Orioles. We're not doing finance questions. I got goosebumps. The Yankees look like 1927, and nobody on the Orioles is over 27.
We have a young team, there's no doubt about it, but they're really good, and the two best records in baseball, the Yankees and the Orioles.
What are you learning? Everyone that knows you, we watch the game, and you always try to hide where you're not with the fancy people behind the plate, but you got your hat on. Are you keeping score when you're watching the game?
No, but I am walking around. I throw out hats. I throw out baseballs. I try to be with people who are, our fans. And we had 3 sellouts against the Philadelphia Phillies this past weekend. Nice. And the Yankees tonight will be a sellout as well.
What's the number one thing you've learned financially, David Rubenstein?
The number one
thing financially, when you look at the P&L and all of it, is it like, are you going to increase the price of popcorn? I mean, what's the number one thing you've learned?
No, I mean, baseball is not the NFL, so you make your money in baseball ultimately when you sell a team. There's no dividends. There's no cash flow that comes out.
Use a cashier.
It's not a business where it produces a lot of cash flow for the owners. Typically, when you make your money, if you want to make money, is when you sell the team. But right now, we just bought it, so we're going to hold it for a very, very long time, and I'll probably be pushing up daisies before the team is sold again.
And folks, folks on YouTube can see David's wearing I'm going to say it's an Orioles tie. I mean, it's got the Orioles colors. It looks fantastic. David, economics of the Major League Baseball today. I mean, small market, big market. Today's a great example. Your smaller market, playing against a big market, New York Yankees. How does that play out for you? How do you think about that?
It's challenging because in the NFL or the NBA, you have these league-wide television contracts, and everybody gets their pro rata share.
Yep.
In baseball, you don't quite have that. So each regional or network has a relationship. Let's say the Yankees have their own network.
Sure.
Yes, we have one in Washington and Baltimore. But because the population of New York is so much bigger, they're going to get more revenue out of their contract than we'll probably get out of ours. So it's a challenging kind of situation, but it's a good sport, and the attendance is up this year, and more people go to Major League Baseball games every year than NFL games.
Really?
Because there are a lot of games.
Yeah.
But people are coming, and so we're sold out a lot, and the Yankees will be sold out this week as well.
And Baltimore embracing this team this year?
Baltimore's very happy. We had a lot of fans, and I think people are pretty happy. Look, when you have a really good record, people like to show up. So
part of your philanthropy, whether it's bringing the Magna Carta to America, what you did with the archives, what you did with Ford Theater, Lincoln's birthplace, brings us back to what you need to do in Baltimore with Babe Ruth's birthplace. Are you gonna link that in with the majesty of Camden Yards?
Well, when the bridge collapsed, the Ravens and the Orioles agreed to put up some money to help the people's families who had been killed in that crash, terrible accident. I will be making some philanthropic gifts to Baltimore in the near future in a couple areas that I'm interested in, and try to keep doing some things to help Baltimore.
They cleared the harbor, really extraordinary from an engineering standpoint.
Yes.
Have you been briefed on when Baltimore gets back to normal?
Well, the bridge is, the area is open for traffic now, but rebuilding the bridge will takes about a year to build the bridge.
David Rubenstein, thank you so much as we look for the Orioles to sweep the Yankees tonight.
The pride of Duke University, by the way.
All right, thanks a lot. Good to see you.
David, good to see you. Thank you so much for stopping by. From New York City on Apple CarPlay on YouTube, this is Bloomberg Surveillance. Futures flat.
Breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures after retail sales barely increased in May. Right now, we have NASDAQ futures, little change, same for Dow and S&P futures. We have the two-year yield for 4.71%, up, down about 5 basis points. The yield on the 10-year, 4.25%, and that's down about 3 basis points. We want to go to Bitcoin right now. Bitcoin lower, down nearly 2% at 65,000, and that's really sparking most with other crypto stocks. We have Coinbase, Marathon Digital Holdings, both down more than 2% right now. Companies making news. We talked about it before. EV startup Fisker filed for bankruptcy. Those talks with that major automaker about an investment, well, that ended without a deal. And Best Buy getting ready for that AI surge. The company said it's trained more than 30,000 employees so far to sell and repair Microsoft's new AI Windows laptops. They go on sale today. Best Buy up about 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Paul Sweeney and Tom Keene here, and this is a joy. In the Keene archives, which is just like Raiders of the Lost Ark, you go in and it's like miles and miles of archives. There is a handwritten letter from Dan Fuss apologizing to me that he could not hire me at Loomis Sales. This is right in the depths of the whatever the crash was the last time around, 1998, I can't remember. And his treasure, because my grandfather was very, very close with a young Dan Fuss years ago. Talk about shoes to fill. Matt Egan joins us right now with Loomis Sales Boston, still working with Dan Fuss. He is 90 and he comes in every day.
He comes in every day. We're in the office.
Good for him.
Is he looking at Quebec Hydro or whatever? You know, when Dan Fuss goes big, folks, in bonds, he buys the whole damn thing. He bought the province of Alberta once. Yeah. Are you making big bets like that now, like
Sure,
Dan did?
We certainly are. I mean, we're still following the same principles he's laid down many decades ago. So that's our job. We got to do it well.
Is credit enhancement, which was the heart of Dan Fuss, buy it and look for a credit upgrade? Is that still part of the calculus?
Still part of the calculus. Discount bonds, getting convexity in our favor, providing liquidity to illiquid markets. It's what we do. It's in our DNA.
So, Matt, we're talking to Matt Egan, portfolio manager, head of full discretion team at Loomis Sales. Matt, how much credit risk should I be taking out there? Because I can sit in a 2-year treasury, and my U.S. government's going to pay me close to 5% here. How much credit risk should I be thinking about these days?
Well, we tilt into credit risk, and there's good reason to do that because you can earn a higher level of yield, and compounding that carry over time works very, very well. Now, you have to do, as Dan would say, do your homework. So it's about item selection. And, I would say, from a top-down perspective, credit is not necessarily really cheap. I don't get really excited about it. But when you open the hood and you look underneath at the individual opportunities, there's still a good amount of dispersion for bond pickers in this space. So we see some good opportunities.
I look at the INGO, which is a Bloomberg index. It shows me where all the fixed income indexes are. And again, I'm an equity guy, so I could care less. But basically, I know high yield has been a place where actually some positive returns we've seen for credit investors. How do you think about high yield versus investment grade? Because Tom and I were just talking about Home Depot pushing out a $10 billion new issue today, and there's a gajillion dollars for demand. How do you think about investment grade versus high yield?
We always look at credit from the level of what are the likely losses that are going to be coming down the pipeline, from a macro perspective. And, you compare that to where spreads are. And the difference is the risk premium. You want to understand what that risk premium is. Now, what I'd say about losses, and this can happen from downgrades and in the case of high yield defaults, is that they're going to be relatively benign. We're in one of those benign credit environments where you can trade at relatively low yields for a long period of time. So relative investment grade high yield, actually the investment grade market on a risk adjusted basis looks more compelling than high yield.
Really?
Yeah.
Okay.
And that's just because, the probability of success based on the risk premium that is embedded in those markets, while thinner, is a better probability of success. Now, some people say, do you like investment grade or high yield? I like both. I like the triple B segment and just down into the double B segment. I think that's where to go. And there's some interesting things on the opposite end of that, which is the lower quality distress market that I think has been left for dead in many cases.
So when you see a Home Depot come out with a $10 billion, it's a name we all know, we all understand the business, $10 billion investment grade offering, there's $47 billion of demand. I mean, so when I know you were one of the first phone calls from JP Morgan or Goldman Sachs. Do you just put in your max order? I mean,
we're active in the new issue space. We prefer to be buyers of secondary markets. Usually it's the best time for an issue to buy.
You're not going to answer my phone call when I'm selling you my new issue?
Sure, we answer the phone. And where we can, we'd like to participate in the crafting of those deals. We get involved in that.
Okay.
You know, so, but you know, like I like stories like, to me, like a story like Boeing is more attractive. You know, from it's you know, it's got some hair on it. Yep. But, you know, look, it's Boeing. It trades in the low triple. It's got a low triple B rating.
What kind of yield do you get from Boeing right now?
You know, you're going to get 6.5%, close to 7% for Boeing.
Yeah,
almost above a preferred.
Now they've got a lot of problems, but we see them getting.
But they're going to pay it. They're going to pay back their obligations.
Okay, Matt Egan, real simple here. Tim Cook calls up Dan Fuss and says, "I want you to come out to Cupertino." And Mr. Fuss at 90 says, "I'll send young Egan." So you're at Apple or Microsoft, these giant tech cash flow providers who are 97% equity, and they're apologizing for their bond. Sell Tim Cook right now on why he should be doing bond offerings for his capital structure.
Well, they are big issuers in the market. First thing I would do to Tim Cook is say, give me your excess cash to manage. We'll make a lot of money for you there. And we do that for some of those tech firms. Okay, so that's where I'd be most interested from a sales perspective. But look, you know, they're going to issue in the market to buy back stock or just to, you know, be able to have some issues out there that they can print and see where they can print them. But they're going to trade tight. Right, that's really not where we're going to make our money at Loomis Sales.
Where geographically are you now? I mean, the acclaim, I don't have it in front of me, but Mr. Fuss literally owned Quebec at one. He owned everything but the Montreal Canadiens and Labatt's beer. But where geographically is the Loomis Sales play right now?
Well, you know, relative to Dan's time, you know, we were very long, and we were long like 20% of our portfolio in the Canadian dollar for a long period of time.
Right.
Wow. We had really pulled back significantly on non-dollar exposure during the bull run of the dollar, and that was a good decision. But we've started to creep out on the expectation that the Fed is indeed going to end up starting to cut. Growth is going to hold up reasonably well. So we think that, you know, you look to places like, where do you look? You go where there's yield, okay? So nothing in Europe really excites me. You go to some of the developed economies. You know, South Africa surprised people to the upside this year despite some of the election volatility. We've been long South Africa.
Tell me about, you know, it used to be Durgan Park. Everybody get to Durgan Park downtown. The mutual fund business in Boston was like ginormous. With the coming of ETFs, the challenges of active management, what's the Boston mutual fund scene look like in the future?
It's consolidating. That's where this business
You want to make
an
announcement here this morning, please? I'd like to make some.
You know, look at. I think the money management, the asset management business is going from sort of an asset light business to an to equity, or sort of capital light business to a capital heavy or more intensive business. We'd like to add more strategic investors to build capital. And I think, you know, the mutual fund business, the fees are coming down, and we're seeing asset managers shifting to, you know, things like private and less liquid and, you know, areas that are more complex that can't be easily replicated with passive and can generate a good fee.
Matt Egan, this has been a joy. Don't be a stranger. Thank you so much. Just great to have you. Our regards to Mr. Fuss.
Thank you very much.
As well. With Loomis Sales.
Yeah, one of the
Boston.
great names. I mean, iconic names.
I literally remember the Loomis Sales envelopes on my grandfather's desk.
Yep.
I remember, you know, we're talking, I think Washington was president. It's before Nixon. Anyway, this is great to go from David Rubenstein and the Baltimore Orioles. We didn't ask Matt Egan about the Red Sox.
No, better not to do that.
Better not to do that.
Oh, the Celtics. He's talking about,
Well, you saw the Celtics. Did you go to the game?
I did not, but, you know, it's nice that they're hoisting up number 18.
Yeah,
it is.
Yeah, they were the best, no question.
Very good. Michael Barr, thank you for that report. A little green on the screen. Fractional lift to the market off of retail sales. They were soggy. Paul mentioned the revisions were a bit soggy. I'm going to point out, rounded up, Brent crude, $85 a barrel, is not a small issue. That's something to watch here into the weekend. Again, June 10th tomorrow, and then Thursday and Friday. On Android, on Apple CarPlay, on YouTube worldwide. Thank you for the live chat on YouTube. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how are the markets going to react? We had some mixed economic data out this morning. U.S. retail sales, where they barely advanced in May. Prior months were revised lower, showing the financial strain on the consumer. But then you had May industrial production beat estimates, rising about 0.9% month over month after no change in April. Let's get to the reaction as the markets open. Right now, we'll start with the S&P 500. That is little changed, up about 3 points at 5,476. We have the Dow little changed, up about 15 points at 38,792. The NASDAQ little change as well, up about 5 points at 17,859. We'll get to the bond market. The 2-year yield, 4.71%, down 5 basis points. The yield on the 10-year, 4.25%, down 3 basis points. Taking a look at commodities, we have spot gold now higher, $2,319 an ounce. We have NYMEX crude, $80 a barrel. Brent crude, $84 a barrel. That is your Bloomberg opening bell report. Tom and Paul.
Lisa Mateo, thanks so much. Joy now. He's in the middle of writing a book. How many pages is your new book going to be?
About 250, 275. Nothing too long. Just a basic primer on how not to invest.
Barry Ritholtz with us right now with a wonderful book around the financial crisis and, of course, this great work. And with a great announcement this week. I mean, when you bring Kaylee Cox on board, you're rocking. I mean, she's from Chapel Hill, Paul.
I know.
It's a problem.
Try not to hold that against her.
You got a market strategist now at Ritholtz Wealth Management. You going to listen to Kaylee Cox?
Listen, we added her. The first thing I did was add her to the investment committee that I'm the chairperson of. And, we're always looking for more ways to communicate with our clients. And, we're over 60 people now. Getting information just to our own internal team is a lot of work.
Quickly here, because I know Paul's got a million questions. The market strategy game. Right now, Kovanovic at J.P. Morgan is the bear on the street and all that. What's it like when you change your view?
So I started out as a trader and eventually became a strategist. So when you come from that background, the old joke on the trading desk was, it's okay to be wrong. It's inexcusable to stay wrong. Okay. And so if you bring that sort of attitude to the strategy role, hey, here's what we said. The secret, from my perspective, is you always want to have clear upside and downside lines in the sand that say, if we hit this level or that level, well then, my underlying thesis is wrong, and I have to change directions. And as long as you build that in to whatever sort of analysis you're doing, you don't get painted into a corner. We all know the perma bears who've been negative since the financial crisis. That's a lot of money left on the table.
Yeah.
Talk to us about market concentration. A lot of people talk about it. Is it a concern? It doesn't seem to be holding this market back.
So I think everybody has a tendency to get mired in a snapshot of where the market is at any given instant, rather than thinking of markets as these long secular cycles that take years or even decades to play out. And you see this whenever people say, well, look at the PE ratio. Stocks are expensive. They're above fair value. Stocks are almost never at fair value other than waving hello on the way up and panicky shouting goodbye on the way down. They're there for an instant. This is why, and we've talked about this before, I despise the definition of a bull or bear market as 20%. There's simply no data that says that's meaningful. Instead, I like the definition of a bull market as the increasing willingness of buyers to pay more and more for the same dollar of earnings. And that means you end up with a long cycle where not only are earnings a driver of market prices, but multiple expansion is a driver of the cycle. And we begin to see increasing concentration in the indices that are market cap weighted. When someone says a big chunk of the market is concentrated, well, it's always concentrated, and it'll continue to get more and more concentrated until we get into a bear market, in which case it begins to get less concentrated.
So what am I doing here? I mean, I'm just going out there and buying NVIDIA, trying to chase Tom's gains.
The market's already green on the screen.
I know. For a second there, we
deep
were looking
into
for
the
some
session,
sellers.
4 minutes.
The definition of intelligence is the ability to hold two conflicting ideas in your mind at once. And so let's talk about the economic news that has come out. Broadly speaking, we are in a very robust economy. Elaine Garzarelli, when was the last time you heard that name, said we're in the most robust economy she's seen in 50 years. Kind of surprising.
First of all, she's still with us.
Oh, yeah.
And active. And with clients, absolutely.
And just remind our audience, Elaine Garzarelli
famously called the 87 crash. She got that right.
Thank you.
She had a kind of mixed track record after that. But anybody who got that crash right, you got to give mad props to. So the two conflicting information is, on the one hand, we have a very robust economy despite the highest rates in 20 years. Yet at the same time, we are seeing evidence that higher rates are beginning to have an impact on the consumer. Doesn't mean we're crashing, doesn't mean a recession is coming, but things are beginning to slow down. And again, if I was Jerome Powell, I would have taken 25 basis points down in the June meeting, and I doubt he'll do that in July, but he should.
In the time of Elaine Garzarelli, And we said greetings to Maria Bartiromo the other day, her 25th wedding anniversary. In those times, there was paper. I know some of you younger won't believe this. There are actually published reports. Tuesday was the big day of delivery of reports. Mona Mahajan was at C.J. Lawrence, et cetera, et cetera. Nowadays, all you do is wait for Sam Rowe to publish, because Sam Rowe aggregates, and you aggregate from Sam Rowe. First of all, I've never seen Sam without a beverage of his choice in his hand. That's a starting point. But he's been on fire recently. What are you stealing from young Rowe?
So first, Sam's Substack is called Ticker, T-K-E-R. He's one of the rare birds who are completely objective, totally data-driven, very evidence-based, and wholly unemotional, which is, let's talk confirmation bias. That's right in my sweet spot. So over the weekend, Sam puts out a run of, 6 reasons to be bullish about this market. And one of them is from a firm whose data I used to see all the time, Global Financial Data. They did a research piece that looked at 235 years of market concentration. And essentially what Brian Taylor, their chief economist, found was that market concentration is very much a quality of U.S. equity markets. And we've gone through 7 periods of intense concentration, depending on what is the dominant sector of the economy and what is that driving in the stock market. Sometimes it's financial, sometimes it's railroads and transport, sometimes it's industrials. Obviously, this cycle, it's technology. Arguably, you look at the 80s and 90s cycle, that was also a lot of technology. And so when you get these giant, long-lasting cycles, and some of these are 50 years long, they dominate the economy, they dominate the market. The flip side of this is Dan Gross's book, Pop, Why Bubbles Are Great for the Economy. What Gross says is, hey, if you like all of these AI stocks, buy them all, or just wait until after they blow up and pick out the winners, or pick out a basket of them really cheap. But think about every major technology, fiber optics, computers, radio, telephone, just go down the list. Each technology has this boom period. Everything gets a little crazy. Then there's a bust, and then you get to pick up things on the cheap. Internet retail, don't forget, Amazon was $5-6 in 2000, 2001 after the dot-com blew up. This is the cycle. This is the pattern that repeats over and over. I wish I could tell you when and where. I'll tell you exactly where to short and exactly where to buy, but we find that nobody can really do that.
How are the dogs?
Dogs are great. They spend most of the summer in the pool, and it's not our pool. They let us use it occasionally. We literally have this dog float, this canvas raft, and the Portuguese water dog, obviously, in the pool all summer. But the rescue, he's chasing the little. We have these floaty toys we throw in.
You play lifeguard?
I think they play lifeguard. It's they're younger and healthier than I am. So.
Barry Ritholtz, thank you so much. Greatly appreciate it. Masters in Business, can't say hugely successful podcast. Look for his book out, The Movie Rights, DiCaprio's. DiCaprio's. Looking at it.
I understand.
It's this kind of thing. We'll see. When do we see a book out?
I think he did Wolf of Wall Street. I think he's kind of done with finance.
You think so? When's your book out?
March 2025.
Oh, there we go. March 2025. Very good.
I had to make sure Michael Lewis wasn't publishing the same month because he just steamrolls everybody.
Yeah, he steamrolls everybody. Speaking, Jonah Hill really is playing Barry? I didn't know that. Very cool.
Now I really have to look.
With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Biden will be announcing today 2 new actions that will provide immigration relief to certain undocumented immigrants and DACA recipients who have been in the country for years. A new program will allow some undocumented spouses and children of U.S. citizens to apply for lawful permanent resident status. The president is also expected to announce a new action that will help facilitate the process of obtaining work visas for some DACA recipients. TikTok's Chinese owner ByteDance has until this Thursday to explain the reasons behind its lawsuit against the U.S. It is a high-stakes bid to overturn a new law that would ban TikTok in the U.S. unless ByteDance sells it. But that lawsuit is going to test the secrecy of lawmakers' briefings. Bloomberg's Amy Morris explains.
Congress members held a series of secret briefings before deciding to pass the law that could lead to a ban of TikTok in the U.S. ByteDance sued, and one of its main arguments is that Congress doesn't have any public proof of a national security threat. Well, the challenge could make it to the Supreme Court, but it also poses a test of whether U.S. federal agencies will divulge the national security secrets that they shared with lawmakers so they can defend the new law. Senator Richard Blumenthal argues that that wouldn't be necessary anyway because the burden of proof falls to TikTok. In Washington, Amy Morris, Bloomberg Radio.
Russian President Vladimir Putin has thanked North Korea for supporting his actions in Ukraine and says the two countries would work together to overcome U.S.-led sanctions. The comments were published today ahead of the Russian leader's visit to Pyongyang to meet with North Korean leader Kim Jong-un. There is breaking news about Justin Timberlake.
As long as I got my suit and tie.
The singer was arrested and is accused of driving while intoxicated on New York's Long Island. A law enforcement official told the Associated Press Timberlake was expected to be arraigned later today in Sag Harbor on the eastern end of Long Island. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Real focus for us into June 30 and the end of the quarter is this great bull market. We're going to try to slice, dice it every way we can and get different opinions. I thought Mona Mahajan from Edward Jones was just brilliant, and many, many others as well. Paul, mostly it's the silence of the bears, and it just continues, the duration that everybody's talking about. I don't think anybody in the modern day is aware, after two once-in-a-lifetime events, what a bull market is. How many people really remember what we remember?
Well, it's interesting. I think what is working for the benefit of this marketplace is just the expectation of an easing Fed. We don't actually have to have the action. It's just the kind of buy on the rumor that this Fed is going to be accommodative in the future. When the future is, we don't know. We kind of coming into the year thought it would be, early in 2024. Now it looks like it's going to be late 24 into 25. It seems for risk assets, it just doesn't matter. As long as we have the expectation of a Fed easing, and you combine that with a pretty solid earnings background, that in and of itself is seems to be a strong enough foundation for these equity markets to move higher. We see real estate move higher, so a lot of risk assets in general moving.
0809, Jamie Dimon buys Bear Stearns office building for what was it, $14.28, and shots at the Monkey Bar.
Yep, exactly.
I think that was part of the transaction.
Mm-hmm, exactly.
From that depth of early 09, up 14.5% per year.
Yep.
It's 697%.
Yep. Good for them.
And yet I wonder how many people really participated.
Yeah.
I'd love to see, Peter Lynch used to do this work years ago. How many people really participated?
Not enough, I guess is the answer.
We're in a bull market, and we will talk about that. The Dow, look at it, up 125 points. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now we have red and green on the screen. Slightly, though, this is after data showing industrial production beat all estimates. Down on the flip side, you have that gauge of retail sales that pointed to a greater financial strain among consumers. So right now we have this mix. We have the S&P 500 up 0.1%, the Dow up 0.2%, and we have the NASDAQ little changed right now at 17,852. The 2-year yield 4.71%, down 5 basis points, and we have the 10-year yield at 4.25%, down 3 basis points. Looking at commodities, we have spot gold higher, $2,319 an ounce. Brent crude, $84 a barrel. We have WTI crude, $80 a barrel. And then moving the markets, that's online education platform Chegg, up 21% now. It announced a plan it's going to cut about 23% of its global workforce, and it includes this growth plan that has a push into AI. You have space company Rocket Lab shares getting a pretty good lift here, up about 9%, announced its largest electron launch agreement in the firm's history. And finally, we have to check in with Broadcom. Right now, down about 0.1%, but it was set on track for its longest winning streak of the year. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Red and green on the screen. This is a joy. It's a 3-hour conversation with Ruchir Sharma, where the book talked about what went wrong with capitalism. Can't say enough about it. Hugely readable, like all his work. He redefined the commodity supercycle years ago. Holds court at the Rockefeller Foundation. It's been way too long.
Yes,
Come
Steve.
back again. We'll do a 2-segment interview to talk about 14 other things. Meghan Desai at LSE has a definitive book on the success and failure of Marxism called Marxist Revenge. The exploitation is still in the air, and there's a lot of people out there that feel with capitalism, what went wrong with capitalism is an exploitation of so many within society. Is that where we are today, back with Meghan Desai and Marx?
No, Tom, I make exactly the opposite point in the book, which is the fact that capitalism is no longer being allowed to work. What we have today is a very distorted form of capitalism. Capitalism at its core is supposed to be pro-competition, pro-churn, pro-creative destruction. Instead, what we have today is a capitalism that is viewed as being pro-big business, pro-incumbent. And what I do in the book is to trace how over the last 100 years, capitalism has been distorted systematically, decade after decade. So in terms of what we have today is, in a way, socialized risk for everyone. Most gallingly for the rich, which Bernie Sanders, of course, calls socialism for the rich. But I think that it's socialized risk across the spectrum. And so therefore, we have a very distorted form of capitalism. That's the thrust of the book.
If we have Trump-Biden, let's assume that Biden is going to continue the theme you're talking about. Can Trump bring a second-term Trump? Can he bring an adjustment to a more constructive capitalism?
Well, unfortunately, the evidence doesn't say so based on the first term. Because what did he do in the first term? Some of the stuff that I think sounded very good, like let's do deregulation in terms of the fact that for every regulation that we put in place, let's withdraw 2. Instead, by the end of the term, Trump had instituted as many regulations as past presidents. As I say in the book, that one of the most telling statistics is that over the last 20 years, America has instituted 3,000 new regulations a year. That's really a huge increase. And it's withdrawn in total only 20 regulations over 20 years. So this is a spectacular sort of increase in the regulatory environment. But it's the suite of government habits that I speak about in the book, including the spending as a share of the economy, which we all know about, the bailout culture, that we speak about. So I think that it's the suite of government habits, the micromanagement of the business cycle. And I think that is what we need to understand, that what we have today is a very distorted version of capitalism, very different from anything the founders had in mind, and very different from even the kind of capitalism that America practiced 3 or 4 decades ago.
Talk to us about protectionism, because it seems like the U.S. or the West versus China, whether it's broader than just a technological Cold War. It seems like it's much broader than that. How do you think about how the West should deal with China these days?
Well, in terms of the West is doing what it is, which is in terms of raising protectionist barriers and stuff like that. But I think that the bigger problem I have with the Biden administration is that they're invoking some of China's bad habits, including having an industrial policy now. And I feel that this is the misunderstanding of what succeeded in China. And also the fact that we are once again spending more government money on stuff we don't know whether it's going to work or not. So we have had this massive stimulus, massive industrial policy. So I feel that that we still are in awe of China at a time when the Chinese growth model has faded anyway. So that's what I find is the great contradiction of the plan. And instead we are wasting billions, if not trillions of dollars on allocating capital. Once again, the government's involvement is just increasing with an industrial policy. So what we have to, as I keep saying, is that it's like, whether it's because of China or using that as like excuse, it's become another reason for the government to get more involved in the economy.
So, you mentioned kind of the deficits and the debt. I'm 60 years old. I've been hearing about that my whole life.
Right.
Is it a problem now? Is it an issue now?
No, I think that's a very relevant point. So therefore, in the book, I show that that's not the central problem that I'm focused on, because I know that it's a lot like crying wolf, because since, for the last 30, 40 years, there's been so much talk about this. Under Reagan, like we switched to deficit financing, and through even though he did nothing really to cut on spending. So I agree with you that this book is not just about deficits and debt. It's about the suite of government habits. It's about the regulatory culture. It's about the bailout culture, which has done. It's the micromanagement of the business cycle. So it's much more than that. But yes, what's happened now with the debt and deficits is that because this thinking has crept in, that it doesn't matter. We have now taken this to a different level. So now we are running deficits of 6% of GDP in the middle of a full employment economic recovery.
I want to bring this full circle with your career at Morgan Stanley and over to Rockefeller International. On their website, they have a memo of 1947 where the Rockefeller family stepped up for India, which was basically in complete chaos in 1947. We've had Rajan on from Booth School, Chicago, the day after the election in India now. Is this a new India where it's not only Modi, but Gandhi and the Congress Party can actually make it a two-party government? Is that what we've learned in the Indian election?
No, I think in the Indian election, what we've learned, Tom, is that India is very much a federal nation, which is that the states have a lot of power. I know we here like to simplify it a bit by thinking about it as the center and Modi, but even when Modi was in power, I think in India, the states have a lot of power, just like in the United States a lot. And we sort of overplay what the influence of the central government is and underappreciate what the state governments in India do. So I think that in India, the big success story, which could be, is one of competitive federalism, where the different states are competing with each other to get more investment, attract more jobs, create more infrastructure. I think that is the real India long-term story.
Is the Rockefeller International, are you based in New York?
Yes, I'm
so
based.
You can come by more often.
I'm very happy to come by and speak about it. Currently, as I said, my focus is obviously, on the book, but happy to chat about anything.
No, of course. Ruchir Sharma, thank you so much. What went wrong with capitalism? Really quite extraordinary. It was some criticisms into the election season as well. Mr. Sharma is at the Rockefeller International as well. This show was sort of breathless.
Yeah.
I mean,
Boom, 3 hours down in the books.
And the market, again, is lifting off better than futures. There's no other way to put it. Alex and Paul will describe Bitcoin under 65,000.
What do you do? Do you step
I didn't
in
ask Ruchir if they're within their. I didn't want them to storm and walk out of the office if Bitcoin's for real.
Exactly.
We'll do that next.
We'll break down some retail sales, Tom. They came in and looking a little bit weaker than forecast. We had some negative revisions on retail sales. So, what does it mean for our Federal Reserve? We'll check in with
the 10-year real yield 2.02%. That's critical. If we get a 199, 198 print on the 10-year real, that's germane. And I'm watching the 10-year real yield.
And Tom,
to see
don't
if
come
that
in
breaks
tomorrow.
out
Remember,
we're off tomorrow.
Yeah,
I didn't know that.
Turn off the alarm. You can sleep in a little
Good.
bit.
Let's play some ZZ Top. Good morning, everyone. Thank you on YouTube and Apple CarPlay.